Good afternoon, guys. Please let me know if the audio and the video is clear. Just give me 1 second. Hi, Pankaj. Good afternoon. Hi, Amna. Good afternoon. Hi, Priyanka. Good afternoon. Okay, perfect. Chalo. Let us start, guys. तुषार एज अ क्वेश्चन, सर स्प्रिंट एंड मैराथन में क्या फ़र्क होता है, कौन सा कब देखना चाहिए? बेटा तुषार, I feel that the sprint series is there at the foundation level. Can you just check? Because I don't think so. Sprint series has been conducted at the inter level. Okay. And I think so. Sprint is in a much more detailed version as compared to marathon. Okay. Chalo. Everybody who is online right now, thank you so much for the confirmation that the audio and the video is clear. As you guys are aware of that, guys, in the yesterday's session, if you remember, within a span of 4 hours, that is okay, Tushar. So therefore, yes, you can definitely watch the sprint sessions, but the marathon session is going to be conducted 2 3 days 2 3 days after this session for the foundation as well. Okay, so if you want, you can view that session. Okay, so everybody who's online right now, as you're aware of, in the yesterday's session, we had covered up all these standards. That is SA 705, modification to the independent auditor's opinion. SA 706, emphasis of matter and other matter paragraph. 701, that is key audit matter. 700, that is forming an opinion. 501, that is audit evidence specific consideration for selected items. 570 going concern, and 560 that is subsequent events. All the standards which are of a very high chance of coming in exam were covered in the yesterday's session. Okay. Today also I'm going to be covering the next important set of sessions. Please make a note of all the standards that we have to cover today. This is our today's target. We have to cover SA 505, that is external confirmation, and mind you, all of this is going to get covered from our handwritten charts. As you can see out here, everything will be covered using the handwritten charts. Okay, I've made these revised charts. I've made these revised charts for all of you. So everything will be covered using these handwritten charts, which are very, very useful for all the students. Okay, sir, from where can we get these charts? Now pay attention very carefully. The charts you can download from the link in the Telegram group. Okay, the Telegram group is basically, you can see the name out here. Just type in the name and you will find the link in the Telegram group. Got it? So in case if you haven't joined, then please join, and then you can find it on the Telegram group, the link for all these charts. Got it? People who are online right now, just check if you have got the link. People who are already there in the group would have got this already. People who are not in the group, please join it, and so that you can get the handwritten charts. Got it? Okay, I hope the notification is clear to everybody. Okay. In case if you are not able to access the group, then please let me know. So our target for today is SA 505 external confirmation, 510 that is initial audit engagement, opening balances, 520 analytical procedures, one of the biggest standards SA 530 audit sampling. Then we are going to be covering, guys, SA 550 that is related parties. After that we'll be covering SA 210 that is agreeing to the terms of audit engagement, SA 230 that is audit documentation, SA 260 that is communicating with those charged with governance, SA 299 that is joint audit, and SA 610 that is using the work of internal auditor. Okay, and in tomorrow's session we are going to be covering all the balance standards. Okay, SA 200, SA 220, 265, we'll discuss about them in tomorrow's session. Okay, tomorrow also our session will be at 4 p.m. Okay, we will try to cover this between 4 p.m. to 8 p.m. but I'm not keeping any ending time. Okay, even if it goes till 9 p.m., 10 p.m., it is fine. I want to ensure that this marathon becomes a one-shot marathon for all the students across India, whether you're from North India, South India. That is the main reason why this marathon is being conducted entirely in English, so that students from South India, North India, West, East, everywhere is able to get benefit of this marathon. I hope the logic is clear. Okay, now some ground rules. The more you are participating in the marathon, the more answers you're giving in the marathon, the more benefit you will derive. Got it? Chalo, let us start now. In the yesterday session we had covered up all of these. Today we are starting off with 505, that is external confirmation. Now please pay attention. People whatever you're doing, keep everything aside and just keep listening to what I'm saying. Understood? Okay, let us start with external confirmation now. But before that, okay, as you very well know, when it comes to the audit, I have to always show you where exactly are we in the chart. Okay, pay attention. Yes, as you're aware of, yesterday only I discussed with you the master chart. Okay, master chart. In the master chart, always remember, when you're starting off with audit, you should always start off with the basics of audit, that is the 200 series, right? After that you should start your audit with the planning stage. Okay, the planning stage will comprise of a few techniques that you have to do in planning, like gathering the client knowledge of client business. You have to ensure that you understand the client's accounting system and the internal control system. You have to set the materiality level. After setting the materiality level, after that you have to perform your risk assessment procedures, so you are able to identify risk or material misstatement, and based on that you'll strategize, you'll prepare your plan and program. Now, and once if you identify the risk or material misstatement, based on that you can respond to that risk. How do I respond to the risk? By performing audit procedures. The procedures are divided into two parts: compliance procedures and substantive procedures. Compliance procedures include majorly a test of controls, right, in order to identify if the controls are designed and operating effectively. Along with that, guys, we have to also comply with the substantive procedures. Substantive procedures include two parts, that is your analytical procedures, that which we'll be covering up today, and your test of details, right, which is vouching and verification. Once you do all these procedures, after that you start gathering the sufficient appropriate audit evidence. Now mind you, you may be able to perform the procedures, you may be able to gather the evidence. It is not fixed. You may be able to gather evidence, you may not be able to gather evidence. Whatever is the situation, all of the evidences will lead you to deriving some conclusions, and those conclusions will help you to form the opinion, which is now expressed in the audit report. And you are well aware of that the opinion is of two types. Yesterday we discussed in detail what is unmodified opinion, what is modified opinion. Modified opinion is of three types: qualified, adverse and disclaimer. Okay, chalo, Now, sir, why did I show you the master chart? I showed you master chart for you to know that the standard that we are doing right now, external confirmation, falls in this category, that is performing audit category. That is performing audit category. What you need to be doing is that when you're performing the audit, that is where you have to follow multiple techniques. For example, inquiry, inspection, observation, reperformance, recalculation, and one such technique is called as external confirmation, okay, which you are doing in order to gather evidence. Chalo. On that note, let us start now with 505. First things first, what is the meaning of external confirmation? Look at here. Important words I've already highlighted in red, so that when you are printing out, I'm sure that this charts which are there will help you on the exam day, so that you know what are the important words. Got it? Okay. Yes, Pankaj. This charts available? Yes, beta. These charts are available in the drive folder, which is there on the group. Okay. For the group, you have to basically just type the name. Take care. When you type the name in Telegram, you'll find the group, and the link is already uploaded there. Got it, beta? Okay. Now let's go ahead. First thing, what exactly is the meaning of external confirmation? External confirmation, the technical meaning is audit evidence obtained as a direct written response to the auditor from the third party. Okay, now mind my words very carefully. You'll have to use these exact words in the exam. External confirmation, I told you, it is a procedure. It is a procedure that you do in order to gather evidence. So therefore, external confirmation is an audit evidence obtained as a direct written response to the auditor from the third party, and that reply you may get either in paper form or electronic form, right? Whether he may reply to you via letter or they may reply to you via the email. Okay. Now what exactly is the, got it? Okay, perfect. Now the next step. Okay, when it comes to this external confirmation, what is the usual procedure? Let me show the usual procedure to you. What happens when exactly I am applying the external confirmation? Look out here. Okay, very simply, suppose my client is here. My client has shown some amount of receivable. My client has shown some amount of receivable. Just 1 minute. Yes. My client has shown some amount of receivable in his books from a debtor. Okay. There are multiple debtors. Out of that. Yes, I think so. We're back. Okay. Now, the auditor, nothing, just some technical issue. Now, as you know, when I'm auditing this client, I want to know if these debtors are actually existing, the valuation is proper. I want to check all the assertions with respect to these debtors. So therefore, I need a confirmation from this debtor that whether they actually have to pay this money to my client or no. So therefore, got it? So therefore, in that case, Ashwin beta, as I told you, as I replied also on the group, beta, that document which is there, that has got corrupted. So I'll have to ensure that I make the revised chart. Anyway, I'm making the revised charts for everywhere. So therefore, I'll be sending that as soon as possible. Okay. I replied on the group, beta. Okay. Guys. So therefore, as an auditor, I want to know whether these debtors who are there, whether these debtors are actually have to pay to my client or no. So therefore, I need a confirmation from the debtor. So what will I do? I will prepare a question, I will prepare a letter, and that letter will exactly have my question which I want to ask the debtor. Okay. After that, I will take a management confirmation. What will I get? I will get a management confirmation, that is they are allowing me to send this question to the client, to the debtor. Got it? So therefore, as an auditor, I'm telling you once again, focus very carefully. Got it? Yes, here is the link with trade receivable audit. Okay, Pankaj, I didn't understand your line. Pay attention what I'm saying. Auditor wants to confirm if the debtor balance is correct or no. Therefore, auditor wants a confirmation from the debtor, but he cannot send the he cannot ask that question directly. He will have to draft that question. Once he is drafting that question, he needs to ask the management for a confirmation. When the management gives him the confirmation, you can also call it as management authorization. If the management is giving him the authorization, after that the auditor will now send the question along with the authorization letter to the debtor, and it will also contain a instruction that please reply directly to me, and that too in a written reply. That has to be a written reply. It cannot be an oral reply. It has to be a written reply. Okay, by this mechanism the auditor will get the confirmation from the debtor. I hope this entire thing is clear. Okay. Now, therefore, once you have understood this mechanism, based on this mechanism, now I can build your 505 concept. Focus on this. Okay. Now, look here. What exactly is the process? The explanation that I just gave you in the exam, you will have to write it in this process format. Okay. First, the auditor will determine. What is the step one, guys? The step one is that auditor will determine what information is to be confirmed. In my example, it was that debtor balance. Let's suppose that particular debtor is the biggest debtor. Okay, for example, my client was supposed to receive 10 crores worth of debtors from the debtors, and out of that I selected I identified that debtor balance I need to confirm. Now in the second step, guys, I will select the appropriate party. Means, let's suppose out of the 10 crores, it is one client X Limited who has to pay my client to the tune of 7 crores. So therefore I realized that out of the 10 crores, 7 crores is the biggest amount. So therefore I selected the appropriate confirming party, that is X Limited, who is the biggest debtor. After that, guys, what I'm going to be doing is I will start designing the request. I will design the confirmation request. Okay. And once I design the confirmation request, I will simply send the request. Okay. And mind you, when I'm designing this request and sending this request, in between that I'm going to be asking for that management confirmation from the client. Got it? Then I will send the request. Okay. And if the third debtor is not replying, I can also send a follow-up request. Okay. Now, before we go ahead, you need to understand that what are the various types of confirmation requests. Remember, there are going to be two types of confirmation requests. One is positive and the other is negative. One is positive and the other is negative confirmation request. What is a positive confirmation request? Pay attention. A positive confirmation request is a request in which I am asking the confirming party to respond directly to me whether the amount is agreeing or the amount is not agreeing. Means whether the amount tallies or the amount does not tally. If you remember, yes, Pankaj, absolutely right. Determine the information, select the party, design the request. Absolutely right, Pankaj. Okay. Now understand, when I'm sending this request, there can be two types: positive or negative. What is the meaning of positive request? Positive request means I want a confirmation from the client. I need a confirmation from the third party. I need a confirmation from third party that whether even if the amount tallies or does not tell you, please at least reply and tell me. Got it? For in my example, X Limited had to pay 7 crores. So I will straight away ask X Limited, is 7 crores payable from your side? If he says yes, 7 crore is payable, he has to reply it and tell me. If he says that no sir, 7 crore, no, it is not payable, only 6 crore is payable, so amount does not tally, still he has to reply and tell me. Got it? Or or it may so happen that I may ask him to provide me some information. Let's suppose my a bank has given a loan to my client. The bank has given a loan to my client, and when the bank has given loan to, I want to know some terms of the loan agreement. I want to understand the loan agreement. That's why I'm sending an external confirmation to the bank to ask them what exactly are the terms of this agreement. So I can also ask them to provide the requested information under a positive confirmation request. Sir, then we understood what is positive. Then what is negative? Remember, negative request. I'll give you a simple technique. What is the meaning of negative request? A negative confirmation request is wherein I'm asking the debtor that you reply only if the answer is negative. Only if the answer is negative. Means what? Means if the amount does not tally, only reply, then only you reply, or else no need to reply. See, confirming party has to respond directly to auditor only if the confirming party, only not the, I'm removing the word third party, only if the confirming party, only if the confirming party disagrees with the information in the request. Okay, if they are disagreeing, only then reply. Okay. So I hope you have got the difference between positive and negative. People who are online right now, please let me know in the chat box if you understood both the types. If you understood both the types, write in the chat box positive, negative, done. Just write this: positive, negative, done. Okay, perfect. Chalo, very good. Now, next point, focus on. Once I send out the request, pay very careful attention. Once I send out the request, what all things can happen? Guys, I may receive a response or I may not receive a response. Barabar na? I may receive a response, I may not receive a response. Now focus. If I receive a response, the response can be in three ways. First, for a positive request, I get a response that 7 crore tallies, means there is no disagreement. So, in a nutshell, my client was saying 7 crores receivable, third party said 7 crores payable. No disagreement, no misstatement. Go ahead, check the next item. Okay. Point number two. Point number two, for positive as well as negative. Okay. The third party replies and says, no, 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 no. 7 crore is not payable, 6 crore is payable. So clearly, can I say disagreement exists? If the disagreement exists, clear, it is called as an exception. What do we call it as an exception? So you need to remember these words also. It is called as exception. Got it? If there is a difference, that is, what is the meaning of exception? Difference between information requested to be confirmed and the information provided. In my example that I just gave you, I was asking whether you are required to pay 7 crores, but the party replied, no, I have to pay only 6 crores. Barabar na? So therefore, in this case, that is the difference. The difference is between, how much is the amount of difference? 1 crore. That 1 crore will be called as an exception. Got it? Okay. Or it might so happen that you may believe that the response that you have received is unreliable. When you feel that the response that you have received is unreliable because the party who is responding, that party might be an unreliable party. For example, Nirav Modi is replying or Vijay Mallya is replying. Then in that case, you need to ignore that and you need to perform some alternate procedures. Okay. So therefore, if the response is received, the response can be of three categories. One, there is no disagreement, there is disagreement, or the reply is unreliable. Now, it might so happen, focus very carefully, it might so happen that you may not receive any response only. Now, what does it mean? It means the failure of the confirming party to respond or fully respond to a positive confirmation request. Now, mind you, be very careful with these words. Failure of the confirming party to respond or fully respond to a positive. Why am I using only the word positive? Because in negative confirmation request, non-receipt of reply is a thing. It's a fact. And why did I send negative confirmation request? Because one feature of negative request is that if it tallies, you don't reply, right? So therefore, remember, if it is only in positive request where I'm always expecting some reply. Okay, and if in a positive request I don't receive a reply, it will be non-response. Okay, or it might so happen that the request that I've sent remains undelivered. Basically, the address was wrong or something, and I got it undelivered. So therefore, it got returned as undelivered. Though that will fall into the concept of non-response. Got it? Chalo. Once we are through with this, now let's go to the next point. As you're aware of, I already taught you the process, right? That is determining the information to be confirmed, selecting the appropriate party, designing the request, and then you have to send the request, correct? Now, guys, when you're designing the request, there are two questions that they can ask you, okay? Question number one, factors to consider when designing the request. I'm repeating the question once again. What factors should the auditor consider when he's designing the request? Or they can ask you, when can the auditor use negative confirmation? In which peculiar situations you should send a negative request? Okay, so these two important questions they can ask you. Now, for the first question, you need to just remember one sentence. You just remember one sentence. The entire answer will be clear with you. Okay. Now remember, for the students who are new, you will not be knowing what is the meaning of HTR. HTR means how to remember technique. Okay. How to remember technique is like a code word. Okay, that will help you to remember all the points in the exam. And mind you, the HTR technique, how to remember technique, is connected to the question. For example, see, factors to consider when you're designing the request. Okay, so what is the sentence? You have to remember only one sentence. Management gave authorization to Arjun Rampal. What is the factor that you need to consider when you're designing the request? That if it is Arjun Rampal, then management will give that authorization. Okay, so remember one point, management gave authorization to Arjun Rampal. Now, sir, what do you mean by this? Pay attention. First point will be management authorization. When you're designing the request, and the Rampal is this. See, R is risk. You know the Arjun Rampal is an actor. R for risk of material misstatement. A for assertions. M for method. P for prior experience. A for ability, and L for layout. Okay. So if you just remember this one sentence, you will know the entire answer. Okay. Now let's understand the answer first. Okay. What is the meaning of management authorization? You already know. I taught you when I was explaining you the entire standard. Okay. If the management is giving me the authorization, only then it makes sense to design the request. If the management is not giving me the authorization, then it doesn't make sense for me to design the request. So remember, one important factor when you're designing the request, basically when you're drafting the request, is to check if the management is supportive or not. Is the management giving you the authorization or not? That is point number one. Point number two is risk of material misstatement. If you remember, when I taught you the master chart, I told you in step 1 in planning, we have to perform risk assessment procedures. If at all, pay attention, if at all the risk of material misstatement is high, you should design a positive confirmation request and not a negative confirmation request. Got it? Because see, negative confirmation requests are a bit risky. Okay, we'll see that when we see this answer, right? When you should use negative confirmation request. So remember, if the risk of material misstatement is high, means high chances of misstatements, then ideally you should go for the least, you should go for the least riskiest one, that is positive confirmation request. Okay. Point number 3, A stands for assertions being addressed. Okay. Now, what do you mean by this? In yesterday's class, we discussed all the assertions. Okay. Assertions mean what the client is trying to tell you through the financial statements. For example, if the client is shown debtors, then the client is telling you that the debtors actually exist. The debtors are complete. The valuation is proper. We have included debtors only up to 31st of March. That is cutoff assertion. So therefore, existence assertion is there. Cutoff assertion is there. completeness assertion is there, valuation assertion. So depending upon the assertion which I am trying to test, I will draft the language accordingly. Got it? So therefore assertion, what are you actually trying to check? Are you trying to check the value? Then ask the data for the value. Are you trying to check what exactly, are you trying to check completeness? Then ask how many goods have they purchased during the entire year. So depending on the assertion, you will draft your question. Next is a method of communication. M stand for method of communication. As an auditor, when you're drafting the request, you need to be very careful. The recipient, the confirming party, is the confirming party a tech savvy person? If he's a tech savvy person, you can send an email. If they are not tech savvy, you should send a letter. Got it? Next point is P stand for prior experience on the engagement. Okay, means what has happened in the past years? If at all you have been auditing the same client for the past years, and if you have been sending the confirmation request in the past years as well, okay, what has happened? Did you get a response to negative? Did you if you had sent negative requests before, was that process fruitful? Okay, have you stuck for positive request? So therefore your past experience with the client, with the debtor, will help you to design the request. Next is ability of the intended confirming party to respond. What does this mean? It means that what is the information that you're asking? Okay, try and understand. You need to think about from the confirming party standpoint. Okay, if you are going to ask enormous questions, they may not reply, they may not have all the answers. So you need to be very clear that the question that you're asking, will that the confirming party, will he have the bandwidth to reply? Will he be able to reply? Will he have the answers to your questions? And last point is layout and presentation. Okay, see, via a letter, via a request, you are asking some data from his books of accounts. So the more easy to interpret request you make, the easier it is going to be for the confirming party to understand. For example, you are just sending paragraphs and paragraphs. The confirming party is not going to read it. Better you can make a table. In the table you can show that where you can show in the table that dear debtor, we understand that you have purchased the following goods from my client. Request you to please confirm the invoice numbers and the payments due. So, and make a table for that. It becomes so easy, right? The layout and presentation easy. The confirming party will easily understand, okay, I am asking you for these 3 invoices, and they will pull out those invoices and see, okay, the amounts are telling. He'll be in a much better position to reply. The more the way in which you as students, the more presentable. See these charts, as you can see, the more presentable these charts are, it is easier to read, right? If they were clumsy charts, you would have not read them. Similarly, the more better presentation you show in your external confirmation request, there are high chances of the confirming party replying. Okay, I hope you got the point. When you're learning, the HTR technique will help you very easily. Management authorization is given to Arjun Rampal. R for risk of material misstatement, A for assertions, M for method of communication, P for prior experience, A for your ability of the party to respond, and L for layout. See, it is so easy to learn, right? Chalo, next point. Okay, when should the auditor send a negative confirmation request? Okay, people who are online right now, did you understand this HTR? If you understood this HTR, write in the chat box HTR done. Just write in the chat box HTR done. I'm repeating once again, the students who have joined in late, okay, you just need to go on this name, just type in this name in Telegram, join the group. The link is already there, the Google Drive link. Okay, chalo, let's go ahead. Now the next question, guys. When should the auditor use negative confirmation request? Okay, perfect. I've got the confirmation. Chalo, aage badhte hain. Now see, you also know, I also know, negative confirmation request is kind of like a shortcut. Yes or no? Because what is happening when you send a negative confirmation request to the debtor or to the bank, what will happen? They will open the letter. If it tallies, they are not going to reply, right? They are not going to be replying. So therefore, when they don't reply and I will not receive the reply, I will assume that the amounts have tallied. So it's assumption based, right? I'm repeating once again, I'm sending a negative request. the confirming party, the debtor will open the request, read it's a negative request. I have to reply only if does not tally. I will check if the amounts have tallied. The confirming party is not going to reply to you. If they don't reply, you will not receive the reply and you will assume that. So it's assumption based. So therefore, since it's assumption based and the amounts may be very huge, like my example 7 crores. So when you're going to be assuming something worth 7 crores, therefore the standard has to be very, very clear in telling you that if all of these, when can auditor use negative confirmation request? I'm just adding one line here. Students, when you take the printout of this, ensure that you add this point in your notes as well. You have to write that when can auditor use negative? If all following conditions are fulfilled. If all the following conditions are fulfilled. Conditions are met. Okay. If all these conditions are met, that is 1, 2, 3 and 4. Take a 1, 2, 3 and 4. All these 4 are met. Only then you should go ahead and get a send a negative confirmation request. The first point is, if you believe that the internal control system at your client place is satisfactory, means the controls are very good. Okay, you believe that they are designed well and the operating effectiveness is there. Okay, point number 2. If there is a low risk of material misstatement. If you remember when I taught you the master chart, the one that we make in our normal classes, the group 2 batch that is going on, see, risk of material misstatement you will identify at the planning stage, and when you are performing the procedures, you will always first be doing the testing of the controls, right? So both these things are happening before you do the substantive procedure of sending the request, correct? So both these answers you will have with you, right? The whether the risk is low and whether the controls are satisfactory, because both these steps come prior to sending the external confirmation request. So if that is clear, then in that case you look at this point number 2. Point number 2 is negative confirmation should be used for populations that consist of large number of small homogeneous account balances. Sir, what do you mean by this? For example, let us suppose, if you can see this water bottle, can you see this water bottle? Okay, let's suppose my client is a manufacturer of these water bottles, and the cost of these water bottles is, let's suppose, 1000 rupees. Okay, it's a very good quality water bottle. The cost is 1000 rupees, and my client manufactures only one product. My client manufactures only this one product, that is this water bottle. One product, one price, 1000 rupees, clear. Okay, and they sell to everybody at 1000 rupees. No magajmari, no problem of multiple pricing strategies. Just one product, 1000 rupees, clear. Okay, now what does it mean? If I'm sending, then in this situation there will be so many people who are buying this all across the country, all across the globe. So therefore there are so many customers, so many debtors. Okay, and all of these debtors who are there, they are large in number. That is point number 1. And the large number of small amount, right? This is a small amount, 1000 rupees, and everybody is homogeneous, right? Homogeneous means there is no difference in the values. Everybody is buying the 1000 rupee product. So in that situation, when there are so multiple debtors, you can send negative confirmation request to all of them, because even if somebody does not receive the request, okay, even if somebody does not receive the request, still the value that they were supposed to confirm is a small amount, right? So you can afford to take the risk. That's why if there are large number of small homogeneous account balances, you can afford to send a negative request. So therefore in that situation, because of this point, now I hope you realize that the value of 7 crores that we had to confirm from X Limited, you cannot use a negative request, right? Because the value is huge. Therefore, in the case of X Limited, you should always go for the positive request because the value was huge. Okay. Third point, low exception rate. Okay. If you have been paying attention since the start, okay, it's been 20 minutes since we started the class. Okay, I already taught you what is the meaning of exception, right? Exception means the difference, right, between the information that I requested and the information I received. Okay, so therefore, if the auditor believes that there is a very less exception rate, means there is a high chance of the amount will tally. only in that case you send a negative confirmation request. Okay, that is called as low exception rate. And fourth point is low ignorance rate. Let us suppose in the you have been auditing the client for the last 3 years and this is the fourth year. For the past 3 years, your client has been dealing with that debtor and you have always in the past 3 years sent a positive request to the debtor. I'm repeating once again, pay attention. Okay, let's suppose this is your fourth year of auditing the same client. The client has been dealing with the debtor since a long time. In the past 3 years when you audited, always you sent a positive request and the positive request was always replied by the debtor. Means it is very clear that your messages are reaching the debtor, right? Your letters are reaching the debtor. It is very, very clear. Therefore, what does it mean? It means that debtor is paying attention to your letter, means that debtor is not ignoring your letter, means there is a low ignorance rate. So therefore, if you are going to be sending a negative request, then therefore that letter will also be read by the client. That letter will also be read by the debtor. The reason is that because the chance of ignorance is low. Got it? Okay. People who are online right now, please let me know. Have you understood both these answers? If you understood both these answers, write in the chat box both answers done. I'm telling you, both these answers are very, very important from an exam standpoint. People who are online right now, write in the chat box both answers done. Chalo, perfect. Okay, and another important point, I am in the process of making this chart in a form of a book as well. Okay, so therefore very soon, probably in a month's time, you will find this entire chart book as a proper book on the Adda 247 website. Okay, so if you want, you can purchase the chart book as well from the Adda 247 website. Okay, the chart book will contain all of these charts in the handwritten format. Got it? So you don't need to print it out, but it will take some time. First, the book has to get ready. It is almost 50% done, 50% is left. Okay, and the main book which is there, the main book is already live on the platform. In case you guys want, you can purchase that book. Okay, the main book, which is the conceptual Q&A book, that book which comprises of all the chapters, that book is already live on the Adda 247 platform. In case you guys want, you guys can go and buy this book. It covers the entire study material and it is in a question answer format. Okay, so you need to just refer one book and one chat book. Done. Got it for your exam. Chalo. Okay, let us go ahead now. Now guys, we are on the last question. Okay, last question of essay 505. After that, we'll be done with essay 505. Okay, then we can move on to the next standard. Okay, now what is the next question? Whatever we studied till now, focus on whatever we studied till now, we were under the premise, or we were under the pretext that if you remember the entire process, step one was what? Auditor needs to identify the information that he has to confirm. Point number two, he will select the party. Point number three, he will start designing the request, but in that he needs to get the management authorization. Now, if we studied the entire 505 under the pretext that management is very encouraging, management is giving you the authorization, we are under that premise, we are under that understanding that management is giving you the authorization. So management gives you the authorization. After that, you send the request to the debtor will reply to you, correct? But what if this is not there? What if the management does not give you the authorization? Okay, then what? Then what happens if the management says no? No, auditor, please don't send this external confirmation request. Guys, if the management comes and says this, then what should be the next steps of the auditor? That is the question. Okay. Chalo, let's see what is the next step for the auditor. Pay attention. The point number one, as an auditor, guys, what you need to be doing now. Okay. The first step is that You will not slap the client. Try and understand this, okay? You are not going to be slapping the client, boss. Okay, he's your client, he's going to pay you, okay? And also it is against your professional behaviors. Don't do these unethical things, okay? What you're going to be doing is you simply need to ask the question why. Ask the client why. Are you mad? Don't ask like this, but don't ask like this, but simply ask the question why. Why are you not allowing me to send the request? Because see, yeah, when ideally in all other clients you're getting the confirmations. If one client tells you no, it is but obvious you need to inquire into the reasons. Okay, now suppose guys, okay, suppose guys, the management says that ki sir, you know what, we are in the process of doing a settlement with this debtor. There's a court case that is going on. With this debtor. We are in the process of settlement. It's an out of court settlement that's going to happen. And this request that you send to the debtor, this untimely request will prejudice this settlement process. Will this untimely request, this untimely external confirmation will lead to a very bad outcome of the settlement. So therefore we please request you, please don't send this request. Okay, now therefore see, I've always been telling you, don't take the management's word for anything. You have to always seek evidence with respect to validity and reasonableness of the reason. For example, what do you mean by validity and reasonableness? Check if what the client is saying is actually true. Sir, how can I check if there's a court case going on? It is so simple, boss. Ask them, show me the court case documents. There are so many documents that are filed with the court. Okay, you can simply ask the client which court is the hearing going on. Let us suppose the client tells you that the hearing is going to go in the Bombay High Court. Then you know every court has its website. You can simply go to the website and put in your client's name and the debtor's name. You will easily identify if the court case is genuine or they are lying to you. Got it? So therefore, the first step that you're going to do is inquire as to the management's reasons for refusal. Okay? Because see, try and understand, maybe the client might be lying also, because they might have inflated their debtor. The debtor balance might be only, let's say, 2 crores and they are showing 7 crores. So the balance sheet is overvalued by 5 crores. And now the client knows, if I send the request to the debtor, everything will fall out. The auditor will come to know that there's a misstatement worth 5 crores due to fraud in the balance sheet. So the auditor will come to know this, and that's the reason they might be lying to you as well. They might be asking you, don't send the request. So we never know. So therefore it's very important to understand if they are lying or they're actually saying the truth. That is step 1. Step 2. Next guys, you need to evaluate. You have to evaluate implication of the management's refusal. Mind you, these exact words you have to write in the exam. Evaluate implications of the management refusal on your earlier assessed risk of material misstatement. If earlier you felt that risk was low, now the risk will be high, and you have to basically ensure what? And you have to basically ensure that you revise the nature, timing and extent of your other audit procedures. Because if, let's suppose, the risk was low, your procedures were low. Now if the risk is high, your procedure will be high. You have to check more. Okay. Therefore, if the auditor believes that the reasons are invalid, auditor may conclude that it will be appropriate to revise the previous assessment of risk. So you have to do this, right? You have to do these things. That is, you have to revise the risk assessment and modify the procedures. That is what is written here. Auditor may conclude based on the fact that the reasons are invalid, means they are lying. Okay, that you have to revise the previous assessment of risk and modify your planned audit procedures. What you had earlier planned, you have to modify them, means you have to increase the checking. That is your step 2. Next, step 3. Step 3, try performing some alternative audit procedures. See, if at all if you are not able to follow one procedure, you have to try to get evidence via other procedures. try following some other alternate procedures. For example, in the case of debtors, the example that I have taken since the beginning, okay, that debtor worth 7 crores. What can you do? You can check if there is a subsequent cash receipt. If the debtor has paid the money, then in that case, let's suppose after 31st of March, the debtor paid the 7 crores. If he paid the 7 crores, then it's very obvious that that 7 crore amount was correct. You can check the shipping documents. If the client has sent some goods to the goods worth 7 crores to the debtor, then in that case, you can confirm that yes, the 7 crore amount is proper. You can also check if at all there are any sales that have occurred near the year end. So check that. In case of creditors, let's suppose I wanted to send a confirmation to the creditor, but the client is not allowing. So therefore, alternate procedures can be check if your client has made payment to the creditor. You can check it in the bank statement if the payment is made. Okay. Check if there are any third party correspondences. Okay. Check the goods received note because it's a creditor. So creditor must have sent when the goods are received by your client, the client would have issued a goods received note. So if the goods received note is there, then that means that you have actually purchased from that creditor. So you can perform these alternate audit procedures. And last guys, if you are very sure that the client was, whatever the client was saying about that court case was ultimate bullshit, if you believe that the reasons for refusal are unreasonable, or if at all you tried doing the alternate procedures, still you are unable to gather any evidence, you are not convinced with the amount, okay, then at last you have to modify the opinion and communicate with those charged with governance. Got it? Yeah, at last you need to communicate with TCWG. Got it, bacho? So 4 steps. Essentially, you need to do 4 steps. Step 1 is that inquire as to the reasons for refusal, okay, and seek evidence with respect to validity and reasonableness. Point number 2, evaluate the implications on your old risk assessment and modify your planned procedures. Then you try performing alternate procedures. And last, if you are unable to get any evidence, and if you believe that the client was lying to you, then in that case you modify the opinion and communicate with those charged with governance. Done. With that, we have entirely completed SA 505. Okay, I'll just give you a small recap of 505. Guys, we started with understanding the meaning. We understood that audit, it is an audit evidence that is a direct written reply from the third party, that is a confirming party, to the auditor in paper form or written form. We saw there are 2 types, positive and negative. In positive, I always want a reply. In negative, I want the reply only if the answer is in negative. Okay. After that, we saw the entire process, determine the information to be confirmed, select the party, design the request, send the request. When designing, we saw these 2 important answers. And after that, we saw if the management does not give you the confirmation, what should be your next steps. Okay. People in the chat box, all the people who are online right now, if you have understood 505 conceptually, write in the chat box SA 505 done, so that we can move to the next one, that is SA 510, initial audit engagement opening balances. Okay, perfect. Guys, I just have one request. Please ensure that you are share this video on your WhatsApp status. Okay. If at all you are a student, especially from South India, okay, please share this video on your WhatsApp status. I'm sure that this marathon, I'm very confident that this marathon will help so many students all across the country. Okay, please share this video with all your friends on your WhatsApp groups. If you are a part of Telegram groups, please share this video there. It will take hardly 2 minutes. Okay, but it will definitely ensure that multiple students are being benefited. Got it? Chalo. Perfect. Amna is saying so the video is lagging. Acha. It will take hardly 2 minutes. Okay, but it will definitely, for example, in the case of data, people who are online, is the video lagging? I don't think so. I can at least on my phone it's not lagging, beta. Chalo, let us go ahead, guys. Okay. Pankaj, can you please confirm if it is buffering? No, beta, Amna, I think so. There might be some issue with your internet. Okay, chalo. Let me start with another exciting standard. Okay, let us start with 530, that is audit sampling. Okay, let's start with audit sampling first. Chalo. I will come back to 510 and 520, but I want to cover 530 first. Okay, one of the biggest standards at the CA intermediate level, very rarely asked at the CA final level, but at the inter level, mind you, you guys are in the new syllabus, but in the old syllabus, you won't believe, audit sampling, which is there, used to, if I'm not wrong, 520 was a separate chapter. Yes. No, 530 audit sampling. If I don't recall properly, but I think so. 530 also used to be a separate chapter in the old syllabus. Okay. But now it forms part of your audit evidence chapter. Okay. Now, what are the things that we need to be studying in sampling? Focus very carefully. It will take me around half an hour to complete this standard. Okay. Chalo. First things first, what is the meaning of sampling? Okay. Guys, sampling means what? It means applying your audit procedures. AP is audit procedures, not Aakash Pednekar. AP is audit procedures. Okay. Applying audit procedures to less than 100% of items within a population. Okay, means what? Means, let's suppose if at all my client has done sales transactions, and let's suppose there are, let's say, in a entire year there are 5,000 sales transactions. 5,000 sales transactions, which is a very normal point by which 5,000 sales have happened during the year. In a year there are 365 days. Okay, so therefore we are assuming that at least on a daily basis, probably somewhere 20 customers came to the shop. As simple as that. Okay, think about it from those lines. On a daily basis, 20 customers coming to the shop is not a big deal. Okay, so 20 customers came and we have basically been selling goods to them and we were giving them bills. So there are five, let's take the simplest example, 6,000 bills. Okay, 300 days the shop was functioning. Okay, 52 Sundays are the shop was shut. 300 days the shop was functioning. In those 300 days, on a daily basis, average 20 customers came, so 20 bills punched every day. 300 days, 20 bills punched comes to 6,000 bills. Okay, now let's suppose this organization that is selling the goods, 6,000 bills. It is not possible for me and my audit team to check all the 6,000 bills. So therefore what I'm going to be doing is that I will be checking not 6,000 but only 1% of 6,000, that is just 60 bills. Okay, or let's say 2%, I will be checking 120 bills. Checking 120 bills is a manageable job. Yes or no? Write in the chat box. Is checking 120 bills is a manageable job? Let's suppose my audit is spanning for 3 months. In 3 months time, checking 120 bills is a manageable job. Let me know in the chat box. Okay, now therefore when I apply my audit procedures to these, to these 2% of the items, what I'm doing, I'm applying audit procedures to less than 100% of items in the population, right? How many items were there in the population? Total 6,000. Out of that, I'm going to be checking, means I will apply my procedures only to 120 items, that is I'm going to be applying more to less than 100% items. Okay, and based on the 120, focus very carefully, based on what I believe, what is the result of checking the 120 samples, I will project that answer to 6,000. Let's take a simple example. Your mom has, let's suppose she has prepared, let's suppose your mom has prepared biryani at home. Now guests are coming over and therefore she wants somebody who can taste the biryani and give the confirmation that whether the salt is proper. Guys, tell me, in that situation what will you do? Are you going to eat the whole biryani, or you're going to just have a bite of it, right? You'll just have one spoon and tell the taste. Very obviously, you will just have one taste of it, one spoonful of it, and tell your review, right? Ki what exactly is the feedback. Just by having one spoon, you'll be able to everybody will be able to gauge that what is the situation with the entire biryani. Same goes here. As an auditor, there is no need to check the entire 6,000 invoices. By checking 120 invoices, I can understand the situation of the 6,000 invoices. Got it? I hope the logic is clear. Application of audit procedures to less than 100% items within a population, based on which the auditor will draw conclusion about the population. I hope the example is clear with you. Now let's understand a few terms which we will be using throughout this standard. First term is called as population, right? The population means the entire set of data from which the sample is selected. In my example, the 6,000 units, right? And from which the auditor wishes to draw conclusion, right? I want to draw conclusion for this population. Always remember, the population needs to be complete, the population needs to be appropriate, and the population should be reliable. So three characteristics should be there of population. Population should be complete, population should be appropriate, and population should be reliable. These three words are very important, remember them. Okay. What is the meaning of sampling unit? Sampling unit means the individual items that make up the population. Okay, for example, that one invoice, invoice number 1, bill number 2, bill number 3, bill number 4, and so on. At the end of on 31st of March, I would have given to the customer bill number 6,000, right? So all of those individual invoices, all of them are sampling units, and when you combine all of them, what we get is the population. Got it? Perfect. Okay, I hope the logic is clear now. Guys, is the meaning clear? And I hope you have understood what exactly is the meaning of population and sampling unit. Chalo, let's go ahead. Now, when we are starting off with sampling, remember there are two approaches. First approach is called the statistical approach, and the other approach is non-statistical. I am repeating once again. First approach is called as statistical approach. Second is non-statistical. As of now, which approach is preferred? It is the statistical approach that is more preferred now. Sir, why is statistical approach more preferred? Because see, we want to ensure that when we are selecting the sample as an auditor, I am unbiased. I am unbiased when I'm selecting the sample, and it is statistical sampling that ensures that I am unbiased. Got it? So remember, in statistical sampling, it is complete random selection. Complete random. Point number 2, it uses probability theory as well to evaluate the sampling results. So it's more scientific. Understand? It's more scientific. It's more formula based. It's more software driven. Okay, so therefore statistical sampling is much better. Sample is chosen. See, sample is chosen by applying mathematical methods, statistical methods. There is no personal bias, and it is especially useful when there are large number of similar items. You remember my same case? Large number of in the last standard I told you large number of small homogeneous items. Here it is large number of homogeneous items, not small. Small is not the criteria out here, but the fact is that when I have multiple, for example, that 6,000 invoices, when there are large number of invoices are there, okay, then in that case the statistical sampling is just is the one that you need. Got it? Okay. Sir, then what is non-statistical? Non-statistical means an approach which does not have these features. An approach that is based on personal experience of the auditor, the knowledge of the auditor. Remember and understood, and it is neither objective nor scientific. Means it is completely dependent on you, which sample you want. Okay, I will randomly say I want invoice number 332, invoice number 432, invoice number 732, invoice number 932. What is that? There is no technique to this. I am randomly selecting the invoices. Got it? So therefore, in these cases, guys, there is no scientific method involved. There is no statistical method involved. There is no probability theory involved. Uh, it may so happen. It may so happen that I'm biased in this selection. Got it? So it depends upon my personal knowledge and experience. These are the two approaches for to sampling. Got it? Okay. Yes, absolutely right, Amna. It depends upon the professional judgment of the auditor. Absolutely right. Okay. Now, guys, there are some advantages of statistical sampling, but this answer we will come at the end. Okay. Why? Because there are one two points here which you'll not understand as of now. You'll have to wait for the next 10 minutes. After that, you can understand these advantages. For example, the first point you will not understand. For example, words like sampling risk you will not understand. So therefore, we'll have to wait for some time, then we'll understand the advantages. Got it? Chalo. Let us go ahead. Now, what is the process of sampling? What is the process of sampling? The process is divided into multiple steps. Step 1, step 2, step 3, 4, 5, 6 and 7. There are total 7 steps to sampling. Okay. But out of that, from an exam perspective, remember, exam perspective, the starting 3-4 steps are more important. Got it? Okay. Now, once we have understood the meaning of sampling, once you have understood the approaches, that is statistical approach and non-statistical approach, now we need to start with the sampling process. Now in this sampling process, guys, what is the step 1? Step 1 is you have to basically first ensure that the sample design is proper. Sir, what do you mean by sample design is proper? You have to ensure that the population has those characteristics, yeah, the CAR. The population is complete, the population is appropriate, and the population is reliable. So first thing you need to check is this. When you are designing the sample, first thing you need to check is whether the population is complete, whether the population is appropriate, whether the population is reliable. Check that. Okay. Point number 2. Point number 2. Now, when we are going ahead with sampling, we need to check what is the demographic of my population. Is my population, just 1 second, guys. Sorry, guys. Okay. I'm saying that we need to check what is the demographic of my population. Is my population homogeneous or heterogeneous? Guys, if my population is homogeneous, means what? I am basically, you remember my example, I am selling one product of 1000 rupees. Okay. Then there is no requirement to adjust the population. But if my population is heterogeneous, what do you mean by heterogeneous? It means I'm selling goods. Let's suppose I'm selling goods worth 500 rupees. I'm selling goods worth 20,000 rupees. I'm selling goods worth 1 lakh rupees. So we have multiple products. Imagine my organization is, my client is Vijay Sales, or my client is Chroma, or my client is Reliance Digital. Tell me, in that shop, do you find only one product which is worth 1000 rupees? No. In that, guys, we find pen drives worth 100 rupees also. Correct? In Chroma, you can find pen drives worth 100 rupees. You can find mobile phones worth 10,000 rupees. You can find iPhones worth 1 lakh rupees. So Chroma as a shop is selling multiple products. So therefore, can I say their sale invoices will be heterogeneous? I hope you got the meaning of the word homogeneous and heterogeneous. Now in that context, so your population is so varied. So your population is so diverse. So therefore, removing sample out of that diverse population is going to be very tricky. Therefore, the standard advises you that what you need to be doing is do the stratification technique. What do you mean by stratification is divide your population into multiple subgroups. For example, I will divide my population, let's say, in 3 groups. Invoices between 1000 rupees, my minimum product value is 1000 rupees. Invoices in the product of invoices in the range of 1000 rupees to 10,000 rupees. Invoices in the range of 10,000 to 1 lakh, and invoices above 1 lakh. Got it? So that's how, in short, what I will do is, according to my judgment, I will split my population into multiple subgroups. That is called as stratification. There is another way also. What is that way? I will rearrange the invoices from descending to ascending format, so that the high amounts are basically kept at the top, and the least invoices, small invoices, 1000 rupee invoice, 500 rupee invoice, is kept at the bottom, but high value items invoices are kept at top. So that is how I will rearrange my population. So I am repeating once again, always as step 1, what you should be doing is, in sample design, you should ensure that your population is in a format which is conducive to remove samples out of it. For that, first check if the population is complete, appropriate, reliable. Point number 2, check if your population is homogeneous, heterogeneous. If it is homogeneous, no problem. If it is heterogeneous, then you need to either do stratification or use the value weighted method. Perfect. Now guys, as the sample is properly designed, basically the population is rearranged in a manner conducive to get the sample. Now we need to be clear with the sample size. If you remember very well, when I started off with this standard, guys, we saw the total invoices at the shop was 6,000. Out of that, I said I will select 2%, right? 2%, that is 120 invoices. That is what I decided. So remember, 120 is sample size. What is 120? 120 is the sample size. But remember, you cannot directly jump to this conclusion of 2%. Okay, you have to ensure you pay attention to both these things. One is sampling risk, and the other is the there are other factors that you need to take into consideration when you're deciding sample size for test of details and test of controls. A very important answer from the exam perspective, multiple times asked in the MCQs as well. Okay, first let's understand what is sampling risk. Okay, try and understand, guys. Sampling risk means what? Sampling risk means the risk that auditor's conclusion on the sample. What was our main point? Our main point is that the sample that you are selecting should be true representative of the population. Correct? That is the most important point. That is what we are trying to achieve. What are we trying to achieve? That the sample has to be true representative of the population, because if the sample is true representative of the population, only then I can project the results to the population. That is my objective of sampling. Now therefore, imagine if at all the auditor believes that the result of the sample will not match the population. The result of the sample will not match the population. That is sampling risk. Means your sampling technique is going to be failing if the sampling procedure is failing. See, look at the technical definition. Risk that auditor's conclusion on the sample does not match the conclusion on the population if the entire population was tested. The procedures that I'm doing on the sample, if I do the same procedures on the population, then the answers will differ. That is simply sampling risk. And remember, your sample size, pay attention very carefully, your sample size, guys, should be such that sampling risk is as low as possible. What I'm repeating this once again, you should ensure that your sample size is such that your sampling risk is as low as possible. Got it? Now, point number 2. If at all the sampling risk is there, pay attention very carefully. Huh? Look here. Sampling risk, guys, may lead to two types of erroneous conclusions. What are the two types of erroneous conclusions that can arrive, that the auditor may lead to if there is sampling risk in the entire engagement? Pay attention. What is the first point? Suppose what I'm doing is testing a test of details. I'm doing vouching verification. Okay. Now let us suppose I selected a sample. Pay very careful attention. We are seeing what is the repercussion of sampling risk. Sampling risk, as you can see on the heading, leads to two types of erroneous conclusions. We are looking at first point. Look at case number 1. I am doing vouching verification. I selected a sample. I applied the procedures on the sample, and the conclusion that I derived is that there are no material misstatements in the sample. Of course, as auditor, I'll be very happy. I don't need to check more. I will project that the population also does not have material misstatements. Correct? And therefore, what will happen? I will end up giving an unmodified opinion. Correct? However, because there is sampling risk here, if I would have tested the entire population, my answer would have been different. My result of the population that I would have tested, the answer would be misstatement exists, right? But I, like a fool, I gave which opinion? Unmodified opinion. But I should have given which opinion? Modified opinion, because the material misstatement is existing. Therefore, can I say it led to me expressing inappropriate opinion, and because of that, what reduced was my audit effectiveness. Got it? I am repeating the whole thing once again. Take care for the students. Pay attention. I know it is a bit tricky. Okay. We are doing vouching verification. I have selected the sample, but the problem is that the sample which I have selected, it is not an adequate representation of the population. Means, let's suppose I have selected less number of units, okay, than required. I have selected a very small sample size. So when I've selected a very small sample size, the result of the sample will not match the population. Okay, now what is the result of sample? That there is no misstatement. Okay, and because of that, I ended up giving unmodified opinion. But if, because sampling risk is there in this engagement, if I would have checked the population, I would have come to some other conclusion that misstatement exists. So I gave inappropriate opinion, and it reduced my audit effectiveness. People who are online right now, did you understood case 1? If you understood case 1, write in the chat box case 1 done. Perfect. Now look at case 2. Same logic, but a different conclusion. Supposing the sample that I selected, focus on, was very small. It was not representative of the entire population. And in that very small sample, I came to the conclusion that misstatement exists. Okay. But you know, if at all because there is sampling risk here, therefore what will happen is that, guys, when in that very small sample, I thought that there is misstatement. Therefore, I felt that there is high risk of material misstatement. So therefore, I started checking more invoices. I increased the sample size. And when I increased the sample size, I came to know that actually the material misstatement do not exist. My initial conclusion was incorrect. Because of this, what happened, guys? Because of this, can I say auditor invested more time and efforts? I spent more efforts in checking. and therefore what did it reduce? It reduced my audit efficiency. That is your case 2. Okay, and the same logic will apply for test of controls. Okay, let us suppose I selected a very small amount of controls which was not representative of the population. What happened was that I came to the conclusion that in the case 3 that controls are satisfactory. But if I would have tested the entire population, I would have come to the conclusion that controls are not satisfactory. When I came to the conclusion that controls are satisfactory, I gave unmodified opinion. But had I tested more, I would have come to the conclusion that I should give modified opinion. Therefore, I gave inappropriate opinion and it reduced my audit effectiveness. And the same thing will go on for the last one also, that is in case 4. So remember, case 3 and case 4 are simply replica of case 1 and case 2. Okay, chalo, let's go to the factors now. Now mind you, these factors, okay, these factors, I have a high gut feeling that in the exam you will definitely get questions on these factors in MCQ section. Okay, the way in which institute is asking you conceptual questions, they are very there's a very high chance of these kind of questions coming in your exam. Got it? Look at this, pay attention very carefully. Now guys, we are looking at the sample size for test of details, means for vouching verification. How many invoices should I check? If at all the auditor reaches a conclusion that risk of material misstatement is high, therefore your sample size should be more. You should check more because of the fact that the risk of material misstatement is high, therefore your sample size should be more. Point number 2, if the auditor expects more misstatement, if the auditor expects that more misstatements are there in the sample, therefore in the population, therefore the sample size should be more. If the expected misstatement is more, sample size will be more. Next point, if the tolerable misstatement level, what do you mean by tolerable misstatement level? It means the materiality level. Guys, if the materiality level is high, if I increase my materiality level, then my sample size will reduce. Sir, why will the sample size reduce? Because let's suppose this, pay attention, this is the entire transactions. Okay, 1000 rupee 1 lakh. Okay, now suppose if at all my materiality level, imagine that there is a timeline of 1000 rupees to 1 lakh. I'll just draw it and show it to you. It will be much more easier for you. Yes, let us suppose okay, the minimum invoice value is 500 and the maximum invoice value is 1 lakh. Let us suppose my materiality level is 5000. Okay, means what? Invoices, this is called as the tolerable level. Okay, or you can also call it as a materiality level. Means invoices below 5000 the auditor is not going to check. He is going to be checking invoices only between 5000 to 1 lakh. Correct? And that too on a sampling basis. Correct? Now let us suppose the auditor increases the materiality level from 5000, he increases it to, let's say, 10,000. How much? 10,000. And this is the revised tolerable level or revised materiality level. So therefore now can I say auditor who was earlier supposed to check from this entire black line, he needs to check only, pay attention, he needs to check only invoices between 10,000 to 1 lakh, and that too on sampling basis. So therefore now he no longer needs to check invoices in this extended yellow line. Correct? He no longer needs to check the invoices between this category. So therefore the number of transactions will go down, therefore sample size will go down. I hope you got the logic. Okay, so always remember, when the materiality level increases, the sample size will go down. I hope the logic is clear to you. चलो आगे बढ़ते हैं. हाँ बच्चों, next point. Guys, if the auditor wants an assurance if the auditor wants an assurance that actual misstatements are less than the tolerable misstatements, okay, then of course he needs to check more. He has to ensure that there is high checking being done. If at all our auditor wants an assurance that actual misstatements which are there, whatever misstatements are there in the population, they are well below the maturity level. Okay, let's suppose there are hardly few transactions and the aggregate of transaction is also coming below 10,000. If he wants this assurance, he needs to check more. I hope the logic is clear. Okay. If you stratify the population, I taught you what is stratification, dividing heterogeneous population into multiple subgroups. If you stratify your population, then in that case, you can reduce your sample size, because the sample that you select through stratification is a very good representation of the population. So therefore, when you stratify a population, you can reduce your sample size. And last point, if you're applying multiple procedures towards the same assertions, you can reduce your sample size. Let's suppose I am checking debtors. For debtors, if I'm already asking external confirmation, I'm already checking I'm already getting an external confirmation, then I can check less invoices. It's fine. Because you can see I'm doing multiple inspecting invoice, asking confirmation, inspecting invoice, asking confirmation. I'm doing multiple procedures for the same assertion of valuation of the debtor. I'm checking the invoice also, I'm asking external confirmation also. I'm doing multiple procedures directed towards one assertion, that is valuation of debtors. So therefore I can check less invoices also. It's fine, my sample size will go down. I hope the factors are clear to you. And same factors, guys, will come for test of controls also. The way in which we saw here, the moment you understood case 1, case 2, case 3 and case 4 is just a repetition. Similarly, guys, for test of controls also it is a repetition. If there is a high risk of material misstatement, you should increase sample size for the controls. You should check more controls. If there is a high expected rate of deviation, what is the meaning of rate of deviation? The chances that the controls are not being properly operated. If there is a high chance that the controls are not being operated in the way they should be, you should check more controls. If same point, you remember where there was a tolerable level of misstatement, here there is tolerable rate of deviation. If the tolerable level of misstatement increases, sample size goes down. Similarly, tolerable rate of deviation increases, sample size goes down. Less control also you can check. If the actual rate of deviation, you remember, if the actual mistake, if I want an assurance that actual misstatements are less than tolerable misstatement level, means below the maturity level, the sample size should increase. Same point, if I want the assurance that actual rate of deviation is less than the tolerable rate of deviation, the sample size should increase. I should check more to get this assurance. Got it? Yash, Varshini, they are available on the Telegram, beta. Just find my name. Just find this name on the Telegram and you will find it. Okay, Yash, beta. Got it? All the charts are not yet uploaded there. As you can see here in the target wala chart, beta. If you want, you can take the screenshot. I have uploaded charts for these, the ones that are marked in yellow. I have uploaded charts for majority of these. Okay, I'll just tell you which all are marked. Out of this, only 700 is not there in the charts. The reason is that because I've taught it from the main book. Okay, but 705 wala chart, 706 is not there. Rest all of them are there. Okay, Yash, you can find, just join the Telegram group and you'll get it there. Okay, the Google Drive link is there. Got it? Okay. Chalo. Let's go to the next point now. What are the sample selection methods? Okay, bacho. Now, the sample selection method depends upon the approach. Okay. If the approach is statistical approach or the approach is non-statistical, remember, if the approach is statistical, then in that case, mind you, this is very important. In the September 24 exam, they had asked a question on this part. Okay. They gave scenarios and they were asking you which type of sampling is this. Okay. So remember, what happens in block sampling, you're selecting transactions in a block. For example, the first 50 invoices or the next 50 invoices. You are going to be selecting invoice number 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 in a block. Got it? So when you select transactions in a block, it is called block sampling. Okay. Point number 2. Another type of statistical sampling is called as systematic selection or interval sampling. Now there is a formula to this. What is the formula? The formula is your you have to basically divide your population by your sample size. I'm repeating once again. What you have to do is you have to divide your population by your sample size. Okay, the sample size that you have decided, right? The sample size that you decided in stage 2. So therefore your entire population divided by sample size. So for example, I have the calculator out here. If you remember, the total invoices at the shop was 6,000, correct? And let's suppose I want a sample size of 100 or 120. If you remember, we were going to check 2%, right? So 6,000 divided by 120, the answer comes to is 50, correct? So I will select every 50th invoice. Invoice number 50, invoice number 100, invoice number 150, invoice number 200, invoice number 250. So I will keep a interval of 50 in between the invoices. I hope you got the logic. That is called as systematic selection or interval sampling. I am repeating the formula once again. Your population, that is the number of invoice, the total sampling units, that was 6,000, correct? You have to divide 6,000 by the sample size. In my example, I was taking 2%, that is 120, divided by 120. Your sampling intervals comes to is 50. Okay, so therefore what will happen is that you have to check, you have to get what 50, you have to keep an interval of 50 and then keep on selecting the invoices. But remember, when you are doing systematic selection, okay, pay attention very carefully. The client may identify your technique, that you are selecting transactions in this interval, and therefore the client may ensure that these in the invoices that you are going to be selecting, the client will identify them. Sir, how will the client know? Because the interval is fixed, right? Invoice number 1, invoice number 50, 100, 150, 200. So of course the client will know you're going to select 250, then 300. So he will ensure that the invoice number 250, invoice number 300, there is no misstatement in those invoices. Now, in order to not create predictability, in order to reduce the predictability, if you want, you can change the cycle as well. For example, I selected invoice number 50, 100, 150, 200. If you want, you can now change the command. For example, you can now do 220, 270, 320, 370, 420. Then again change the command. 430, 430, 480, 530, 580. Got it? Try to maintain the 50 ka gap. Try to maintain the 50, but in between, if you want, you can change it so that the predictability is reduced. I hope the logic is clear. Got it? Pankaj has a question, sir. What is the difference between block sampling and stratification? Okay, beta, try and understand what is happening in stratification. Beta, in stratification you are dividing the population. Okay, you're dividing the population, and in block you're selecting the sample. So there are two different things. In stratification, what I'm doing is I'm dividing the population into multiple subpopulations. For example, invoices in the range of 100 to 1000, invoices between 1000 to 10,000, and between 10,000 to 1 lakh. So now you have three populations. Now in that population, when you apply block sampling, for example, there are going to be multiple invoices in that sample, right, in that population. Now out of that one population, when you select transactions in a range, in a total, in a sampling together, that is going to be block sampling. So the difference is that stratification is a way of presenting population, and block sampling is a way of selecting the sample. Next is monetary unit. Very simple. You have to select the high value items. Okay, the ones which are the ones whose value is very high. For example, invoices above 1 lakh, invoices above 50,000. That is monetary unit. What do you mean by random sampling? Random sampling means what? It will depend upon whether your population was stratified or not stratified. If your population was stratified, guys, then it is called as stratified random. If your population was not stratified, then in that case it will be called as simple random. Okay. In this case, the auditor has two options. You can either use a random number generator or random number table. For example, what you do is that there are many multiple softwares available in the market. For example, EY uses a software called as EY Random. What you have to do is you have to simply tell the software the list of all the numbers, the list of all the invoices. For example, invoice number 1 to invoice number 6000, bill number 1 to bill number 6000. Okay, you inform the software about the invoice numbers, and the invoice will ask you how many samples do you want. You have to put in the number 120 samples. Now the software will randomly tell you any invoice numbers. That is called as a random number generator. Got it? Similarly, there can be random number tables as well. These are tables which are available online. There are multiple tables. You take any table, and the table which has these numbers, you select the invoice from those numbers. Got it? For example, there is a table which has numbers. There are so many numbers, and out of that, whichever table you're selecting, the number which is there, you tell your client that please give me invoices which are having these numbers. Got it? That is random number table. Got it? I hope you are clear with the sample selection methods now. And non-statistical sampling has only one, that is haphazard, completely dependent on your professional judgment. Whichever sample that you want, you select. Got it, bachcho? Okay. Next. Once the samples are selected, now you will check the samples. That is, you will do detailed checking of the sample. Okay. You will check the samples properly. After that, you need to identify the nature and cause of the misstatements. If you saw any misstatement, then you need to identify what is the nature and the cause. Why was this misstatement actually, why did this mistake actually happen? Suppose, let's take an example, guys. Let's suppose as an auditor, you identified, well, let's take the same example of chroma. Okay. Let's suppose the samples that you had selected, okay, the entire sales, you remember the entire sales were worth 6000 invoices, and the total sales value of that chroma shop was 10 crores. Okay, you selected, out of the 6000 invoices, you selected 120 invoices. Pay attention very carefully. I'm repeating once again. The total number of invoices 6000, total sales 10 crores. Okay, out of 6000 you selected 120. Okay, and the value of the invoices that you selected 120 was in the range of, let's suppose, 2 crores. You checked sales worth 2 crores in that sample. Now when you check those sales of 2 crores, I'll just draw in the diagram and I'll show you. It'll be easy for you. Look at this. Okay, guys. Now, total sales was 10 crores. Total invoice was 6000. Total sample value that you checked is 5 crores, and total invoices that you checked was 120, because we checked all the high value ones, right? So therefore we have checked samples worth 5 crores. Now let us suppose in this sample that you checked worth 5 crores, you realized that there are no misstatements and there are some misstatements. There are no misstatements to the tune of 4.5 crores. but there are misstatements to the tune of 0.5 crores. Okay, basically means what? 50 lakhs worth of value is misstated in this 5 crores. In this 5 crores, you saw misstatements in 50 lakh worth of invoices. And in this misstatement of 50 lakh worth of invoices, you saw majority relates to product that is TV, and other products okay. I hope you got the logic now. What is happening? See, I'll explain this to you once again. Chroma did a total sales of 10 crores. The sample that you selected had a value of 5 crores. The 120 invoices that you checked, you actually checked value of 5 crores. Now out of that, you saw that there are no misstatements in 4.5 crores, but there were misstatement invoices with a 50 lakh value. And in that, out of that 50 lakhs, 40 lakhs were of product TV. 40 lakhs worth of misstatements were in invoices for a single product TV. Okay. So therefore, it's very obvious that there is something wrong. There is something wrong when it comes to the when it is coming to this, right? And there is a high chance that the sample value that you have not checked, right? The sample value that is untested sample value is how much, guys? Same 5 crores, correct? Because this 10 crore is of two parts. One is the tested sample and untested is 5 crores. There will be misstatements here as well, right? In the TV invoice, there will be misstatements here as well. That is how you come to that conclusion. That is what you need to do. When you are identifying the nature and the cause of the misstatement. I hope the logic is clear. And last point is the projection. What you need to be doing is that, pay attention. When it comes to test of controls, guys, you actually don't need to do the projection, because the sample deviation rate is actually the population deviation rate, right? For example, let's suppose you realize that the controls are deviating by 20%. Okay, so of course in the population also you will have to see the same thing, that the controls in the population deviate by 20%. You did not project it. The sample deviation rate is the population deviation rate. However, out here, look here, when it comes to test of details, the projection is required. And in fact, if there is an anomaly, if there is an anomaly which is not rectified, if the anomaly includes an anomaly, if any, is not rectified, then that also needs to be projected. Got it? I'll just show it to you by way of an example. Pay attention. Let's suppose, let's take this same example. There are misstatements worth 50 lakhs, right? So now 50 lakhs is how much percentage of 5 crore? Can I say 50 lakhs, guys, is 10% of 5 crores, correct? 50 lakhs is 10%. So therefore, we saw that 10% sales in the sample are misstated. Therefore, now I will project it to the population. The population is what? 10 crores. So therefore, we can project it that 10% of population is misstated. So what is the value of misstatement? That is what is the expected misstatement value? It is 10% of 10 crores. That is equal to 1 crore worth is misstated. I hope you got the logic, how you have to do the projection. Okay. Now the next point. Suppose, guys, in this entire amount of 50 lakhs, now pay attention very carefully. In this entire amount of 50 lakhs, let us suppose there was an anomaly. Anomaly means what? It is a misstatement which is not representative of the other misstatements. Okay, means let's say it's just a one-off misstatement that happened. Now, therefore, remember, if that anomalous misstatement client rectifies, then you remove it from the 50 lakhs. Barabar na, because the client has rectified it. But simply remember, if the client does not rectify it, then in that case, you have to include it in the 50 lakhs and then you have to basically rectify it. I hope the logic is clear. I'm repeating once again. In in this 50 lakhs, let's suppose there's a misstatement worth 10,000 rupees, okay, which was an anomaly, which you did not find it anywhere. It was just one off misstatement. Okay, and if the client rectifies that 10,000 wala misstatement, then you reduce it from the 50 lakhs. But if the client does not remove it, then you keep it in 50 lakhs and then you project it. I hope the logic is clear. Done. Okay. And the last point, evaluate results of audit sampling. You check if the sampling has given you adequate results or no. Got it? Okay. People who are online right now, please let me know, have you understood SA 530? Okay, have you understood SA 530? It's a very, very important standard from an exam standpoint. If you understood 530, write in the chat box SA 530 done. So we are right now done with, yesterday we were done with 705, 706, 701, 700, 501, 570. Okay. Right now we finished 505 and we finished 530. Correct? Okay. Chalo. Let's go to the next one now. Do you guys want a break of 5 minutes? It's almost 6 o'clock. Do you guys want a break of 5 minutes? Do you guys want a break of 5 minutes? Okay. Chalo. Take a break of 5 minutes. It is 6 p.m. Take a 10 minutes break. Hello. चलो बच्चों शुरू करें. Let us start. Okay. Guys, the dinner break will be at 8 o'clock. ठीक है? 8 o'clock to 8:30, 8:45 will be the dinner break. So you can inform your घर पे. चलो. Let us start now with SA 520. Okay. Now. चलो. Guys, what do you mean by 520? 520 talks about analytical procedures. Okay. Now, what is analytical procedures? What are the things that we need to see in here? First point. Analytical procedure means evaluation of financial information through analysis of the plausible relationships among both financial and non-financial data. Okay, a very simple example you can take is let's suppose last year, guys, the number of employees was 500 and the amount that we paid as salaries to these 500 employees was 50 lakhs. But in the current year, the client has laid off 200 employees. Therefore, what happens is that when the client has laid off 200 employees, okay, the number of employees becomes 300. But the salary amount that you can see in the P&L debit is 1.5 CR. So it begs the question that how is it that the number of employees has gone down, but the salary amount has increased? How is that possible? If the number of employees has gone down, how does the salary amount increase? Ideally, if the number of employees go down, the salary amount should go down. So what did we just do? We have analyzed relationship between financial data and non-financial data. Salary amount is the financial data and number of employees is the non-financial data. Sir, please increase volume of the mic. Okay, 1 second. 1 second, hold on. Is it better now? Better now, beta? Okay. I'm saying that the financial data is the salary amount and number of employees is the non-financial data. Okay. So as you saw that the analytical procedures, remember very carefully, analytical procedures helps you to evaluate financial information. Okay. And you can identify where the risk is more. So therefore, as you can see out here, when can you apply analytical procedures? You can apply them at all the three stages. That is the planning stage, the testing stage, and the completion stage. The thing that I just explained to you, where I just simply compared the salary figures of the previous year and the current year, I was actually applying the analytical procedure at the planning stage so that I can identify that there is risk in salary. Okay. And therefore, let me just go back to the master chart for a minute. Yes. Look here. I just gave you this example that if the employees last year was 500, salary was 50 lakhs, current year employees 300, salary is 1.5 crores. Okay, therefore you saw that there is high risk in salary. Therefore you need to test salary more. That is, there should be more sample size for salary. Got it? So what we just applied this analytical procedure, we applied it at the planning stage. So that now you know when you're going to be doing the test of details, you know that you need to keep a higher sample size for when you're vouching the salary. That time you need to keep a higher sample size for salary items. I hope the logic is clear. Therefore, Remember, the analytical procedures can be applied at all the three stages, that is the planning stage, the testing stage, and the completion stage. Okay. Remember, whenever you are applying analytical procedure at the testing stage and completion stage, we call it as substantive analytical procedures. Got it? And when you're applying it at the planning stage, it will be called as only analytical procedures. Okay. Remember very carefully, in the exam when they say that it is substantive analytical procedures, means they are discussing either about stage 2 and stage 3 testing stage or completion stage, but when they use the word only analytical procedures, they are discussing about the planning stage. Got it? Now, what are the various types of analytical procedures? First, let's look at all the 5 types. Okay bacho, there are 5 types of analytical procedures that you need to know. Okay. First type is ratio analysis. Okay. Here, what does the auditor do here? Here the auditor will compare the client data with the industry average. For example, if your client's gross profit ratio is 20%, but the industry average is, let's say, 5%, then clearly it's a high risk, because how is it possible that if the industry average is 5 and your client is operating at 20%, means there is some issue. So you saw how the when you applied analytical procedure and in that ratio analysis, you are able to identify that there is a high risk in gross profit. Similarly, trend analysis. Let's suppose the trend of the past 5 years is that the rent expense has increased by, in the rent agreement, the rentals have increased by, let's say, to the tune of, the rentals have increased by 10%. The rent agreement says that rents have to increase by 10%. And the rent has increased by 10% only in the last 5 years. So every year rents have gone up by 10. But in the current year, you saw that rents have gone up by 20% or 30%. How is that possible? The trend is not matching. You inquired with the client that, have you guys taken a new place on rent? The client said no. Have you guys taken some additional space on rent? The client said no. It is the same space, same landlord. Then in that case, how is it possible that the rentals went up by 20-30% when the trend was 10%? So therefore the auditor realized that he has to check the rent amounts properly. That is trend analysis. Third technique is reasonableness test. Okay, what do you mean by reasonableness test? Imagine you saw that in the P&L debit, the interest expense is 1 crore, and you saw that the loan that you have taken is 2 crores. How is it possible that if the interest expense, interest bearing obligation, that is a loan, is 2 crores and interest debit is 1 crore? How is that possible? Is the rate of interest 50%, which is very absurd, right? It's an unreasonable interest expense. It can be 10%, 12%, 8%, right? So based on that, if the loan amount is 2 crores, the ideal interest that should be debited in the P&L at 10% should be 20 lakhs. But the client has shown 1 crore as interest expense, which is completely unreasonable. So you need to check that more. You need to do further procedures for interest expense. The next type technique is called as structural modeling. Now, what do you mean by structural modeling? Pay very careful attention. Okay, structural modeling is a technique wherein what will happen is that the auditor will draw a model. I'll just draw that model for you and I'll just show you. Look on the screen very carefully. Look here. Let's suppose this is the advertisement expense and this is the sales. Okay, as an auditor, you saw that, let's suppose this is let's suppose in year one, uh, currently, let's suppose you are in the 4th year. In year one, you saw that your client had spent 1 crore on advertising and the sales generated was 10 crores, right? So it will match somewhere out here, correct? Dhruv has a question, sir, which standard is currently going on? Beta, currently, I'll just show you the targets. Pay attention. Yesterday we completed all these standards. Beta, if you want, you can take the screenshot. Okay. Yesterday we completed all these standards. Today we completed 505 and we completed 530. Right now we are on 520 beta. 520. Analytical procedure. Okay, Dhruv. Chalo, come back. So it will match somewhere here, correct? Next point. In the year 2, you saw that your client had spent, let's suppose 2 CR and the client got a return on sales that is 20 crores. So it will match somewhere out here. Let's suppose in the 3rd year, your client spent 2.5 CR. Okay. And the sales that was generated was 25 crores. So it will get marked somewhere here. Now, therefore, in year 4, your client is saying that they spent an advertisement amount of 4 crores. Okay, so therefore, it is going to be very easy for us to draw this line. Look here. Correct? And therefore, if your client is saying that they spent an amount of 4 crores, it will fall somewhere on this line, correct? And it will intersect here. So therefore, your expectation of the sales will be somewhere in the range of 39 to 40 crores, correct? Here. That's going to be your expectation. So therefore, now as you noticed, you had a figure of 4 crores in your mind. That 4 crores is the advertisement. And your expectation is somewhere this, right? 39 crores and 40 crores. That's your expectation. So this is called as structural modeling. Okay. Now, I hope the logic is clear. Okay. Then the next stage is unsophisticated predictive model. What do you mean by this? Guys, unsophisticated predictive model simply means that you will apply a very simple formula and try to get the expected value. For example, you want to identify total wages. What is going to be your expectation? Your expectation will be number of workers multiplied by the daily wage rate multiplied by the number of days that they worked in the year. Right? When you apply this simple formula, you can identify the total wages that is expected. Got it? Now, if you notice very carefully, if you have been listening to everything that I said very diligently, you will realize, guys, that in all the 5 cases, the auditor reached a certain expected value. Where did auditor reach? He reached at a certain expected value. For example, if you remember structural modeling, we reached at an expected value of 40 crores worth of sales, correct? In unsophisticated predictive model also, when you apply the formula, number of workers multiplied by the daily wage rate multiplied by the number of days, you will come to the expected daily wages. When you apply reasonableness test, I told you my expected interest amount, if the rate of interest is 10%, was 20 lakhs. When I applied trend analysis on the rent, last year's rent was, let's suppose, 10 lakhs. And if it is increasing at 10%, my expected rent is 11 lakhs. So remember, all these techniques will help you to reach an expectation in your mind. Okay. Now hold that thought. Okay, why that expectation is important? Because that will help you when you're applying the entire process of analytical procedure. ठीक है. See, step one, as an auditor, what is the process of applying analytical procedure? I will first identify the suitable analytical procedure out of the five. Out of the five, I will select any one procedure which I find it suitable depending upon my judgment. I can go for trend, I can go for ratio analysis, I can go for structural modeling, I can go for reasonableness test, I can go for unsophisticated predictive model depending upon my professional judgment. I selected the technique. After once I select the technique, I will check if the data, the source data that the client is giving me, whether it is relevant and reliable, because unreliable data will yield unreliable results. So the second thing that you need to check is if the data is reliable. For example, when we did the structural modeling, the advertisement expense that the client is telling me, is that a reliable data? When I was checking the interest amount, I wanted to check what is the total amount of loan taken, right? Whether that data is reliable. Okay, so you need to check if the data is reliable. That is stage 2. Step 3, when you apply, focus on, when you apply the technique, you will develop an expectation. I hope now it is clear why this word expectation. I told you, hold that thought, right? When you apply the procedures, you'll be able to get an expected value in your mind. Now, that expected value, guys, you will compare. That expected value you will compare with what? That expected value you are going to be you will compare with what is given in the books of accounts. Got it? For example, let's suppose when we did that structural model, the actual sales shown by the client is, let's say it is 60 crores. How much? 60 crores. And your expected sales applying that structural model was 40 crores. So therefore when you compared, you saw that there's a huge difference. Or another outcome can be that the value, after doing the structural model, your expectation is 40 crores, and the amount depicted in the books of accounts is, let's say, 40 crores 50 lakhs. So your expectation and the value in the books is matching, right? There's a little bit difference, but it's almost matching. So these can be the two outcomes. Okay, but if, guys, the difference is unacceptable, for example, the way my example number 1, wherein the actual sales shown in the books is 60 crores. How much? 60 crores, and my expectation was 40 crores. So the huge difference of 20 crores. So now I can't ignore that. I have to ask the client, inquire with the management, that why there is such a huge difference. Why is there a huge difference? Okay, now there can be two outcomes out of it. Management may provide you with a satisfactory reply, or management does not provide you with a satisfactory reply. Guys, if the management provides you with a satisfactory reply, then in that case you don't need to do any further procedures. Okay, sir, how is it possible? How can the management give you, let's suppose the client says that, okay sir, during the year we launched a new product. It was we were the first movers in the market, and we have a patent on that product, and that product went viral. That is the reason why we were able to amass the additional revenue. So therefore, when you check all of that and you are sure that, okay, yes, they are saying what is true, therefore you don't need to check anything further, no further procedures, because the client gave you satisfactory reply from where the additional 20 crore sales came. But if the client is not able to give you any satisfactory reply, of course, auditor will have to do further procedures to investigate the difference. Got it, guys? I hope the logic is clear to you now. Yeah, I hope it is clear that how I connected both the answers, that is the process of applying analytical procedure and the types of analytical procedures. Okay, people who are online right now, if you understood this, then write in the chat box, process understood. Write in the chat box, process and types understood. Write in the chat box, process and types understood. Perfect. Okay, very good. Chalo, let's go ahead now. Now the next point. Okay. Another important question that the institute can ask you is, when you're applying analytical procedures, what factors need to be considered by the auditor before you apply analytical procedures? Okay. So therefore I have given an HTR also out here for you. Okay, what is the HTR guys? It is inherent risk of pandas. What is the HTR? Inherent risk of pandas. Okay. What is the first point? In now pay attention very carefully, and this is very technical. Point number one: if at all an item is inherently risky, then remember you will not rely only on sole substantive procedures, sole analytical procedures. Means what? If at all an amount is inherently risky, you will have to ensure that you do more procedures. I will give you an example of this. Pay attention. Guys, if you remember, yesterday when I was teaching you, perfect. Guys, yesterday when I was teaching you SA 701, in that we saw that there was a key audit matter. Look here. Yesterday when we were doing SA 701 key audit matter, I showed you that the advertisement revenue, ad revenue was selected as a key audit matter by the auditor, and this is how the auditor addressed that matter. If you remember very well, the key audit matter was introduced with the perspective of connecting with the user. It was introduced so that the auditor is able to explain how he conducted the audit. Now if you look at this very carefully, look here. What is the auditor saying? The auditor is saying that we identified advertisement revenue as a key audit matter, correct? Why? Because there is an inherent risk regarding existence and accuracy of revenue. Look at the sentence. There is an inherent risk regarding existence and accuracy of revenue. Means the auditor believes that there is a risk in the revenue recognition. Therefore, he had spent quite some time. He had spent quite the efforts to audit revenue. And if you notice out here, look at this point number 2. Point number 2 is the analytical procedure, the reasonableness test. What is this test? The reasonableness test which the auditor applied, right? We assess the reasonableness of the timing and amount of revenue. So this is the analytical procedure which the auditor applied. But is it the the only procedure that he applied? No, right? He applied, look here, he applied this procedure, this procedure, this procedure, this procedure, this, and multiple procedures also along with it. So moral of the story is that whenever an item is inherently risky, okay, you should ensure that you're not relying only on analytical procedures. You have to do other procedures as well. That is one factor that you need to remember. Got it? Pankaj beta, the difference is only in the timing of applying. For what I just explained to you, look here. Beta, if at all you are applying the analytical procedure at the planning stage, then it is called as analytical procedure. But when you're doing it at testing and completion, it is called as substantive analytical procedure. Got it? Okay. I hope the first point is clear to you now. Where there is inherent risk, you should ensure that you gather evidence using other procedures as well. Point number 2, when you are applying analytical procedures, you need to apply them. Focus on. When you're applying analytical procedure, you should apply them majorly for those items that are predictable. For example, usually remember, it is the income statement items that have high predictability. For example, as a businessman, for example, take the case of your parents. If you ask your parents what will be the approximate amount of electricity bill that will come next month, parents will very well know that what is the electricity, because since so many years they are staying in the house, they will very well know what is the electricity expense that will come in the next month. They will know what will be the gas bill that will come in the next month, correct? So moral of the story is that, guys, items which are income statement items, okay, items which have a high transactions, more number of transactions, recurring transactions, there the predictability is high, and that is where the relationship gets established. That is where the trend starts to form, and therefore items which are highly predictable, you can apply analytical procedures over there. A very simple example, you can apply analytical procedures on rent, on electricity, on purchase, on sales. However, applying analytical procedure on fixed assets is stupidity. Why? Because fixed assets is not something that we buy every day. It is not something that we buy every month. We may buy a fixed asset in many years, right? Once I buy, maybe I don't need a fixed asset in the next 5 years. So there is no predictability in fixed assets. Got it? Point number 2, if the data that you possess, if it is not reliable, if it is not relevant, don't apply analytical procedures. Got it? For example, if you remember when I explained to you ratio analysis, okay, when we saw about ratio analysis, I told you I will develop an expectation, and I will compare my expectation with the client's number. For example, I told you the client's number of gross profit is 20%, whereas the industry average is 5%. Okay. So imagine if the industry average number, with which I am comparing my client's data, if the industry average number is not reliable, how can I apply analytical procedure? So remember, for applying analytical procedure, the data has to be reliable as well as relevant. Okay. So if you have reliable and relevant data, only then go ahead and apply analytical procedure, or else don't. Next is the nature of assertion. Okay. Guys, we have seen so many assertions in the last class. Okay. There are assertions, for example, when it comes to profit and loss items. See, look here. Look here. When it comes to profit and loss items, there are so many assertions, right? Presentation, disclosure of complete chief minister office. So as you can very well see, guys, analytical procedure may help you for completeness, may help you for cutoff, may help you for measurement occurrence, but analytical procedure will not be useful for presentation and disclosure. This assertion, the analytical procedure will not help you with presentation and disclosure assertion. It can help you with the others, but it will not help you with the presentation disclosure assertion. So remember very well that analytical procedures will help you for few assertions, not for all. Got it? Okay, and last is disaggregated data. Okay, what do you mean by disaggregated data? Look at this example. Suppose sales have every year increased by 10%. Okay, the last year sales was 100 crores. The current year sales is 110 crores, right? Now, if you look at these numbers, you will feel that there is low risk of material misstatement because the trend is getting established, right? There is an increase of 10%. However, remember, what we are checking is aggregated data. The moment you check disaggregated data, see how the conclusion changes. Let's suppose this sales was divided into two parts, domestic and export, domestic sales and export sales. This is divided into two parts, domestic sales and export sales. Let's suppose last year the number was 50 crores. The current year sales is, let's suppose this is 100 crores and this is 10 crores. Now, if you remember, when you checked aggregated data, your conclusion was that there is low risk of material misstatement because the trend is established, correct? There is low risk because the trend is established of 10%, right? When you checked aggregated data, right? But guys, when you saw disaggregated data, basically data that is broken down, you will realize that 50 crores has become 100 crores and export sales of 50 crores have become 10 crores. So clearly the trend is not getting established. So you'll realize that there is high risk. Your conclusion changes. Earlier the conclusion was low risk. Now your conclusion is that it is a highly risky thing. Auditor has to check in detail. Got it? So remember, always when you are applying analytical procedure, you should try to gather as much as disaggregated data as possible. Next, account type we already discussed. Okay, always majority times your analytical procedures are applicable on income statement account, not on the balance sheet. Okay, and last is source. Source means the number of transactions. Source का मतलब क्या बच्चों? Number of transactions. If the number of transactions are huge, the predictability will be established, and therefore you can very well go ahead and apply analytical procedures if the number of transactions is more. If the number of transactions is less, then in that case the predictability will not be established and you will get inaccurate results. Got it, bacho? Is the pandas clear to is the pandas clear? In the exam, just remember one word: inherent risk of pandas. Inherent risk: P for predictability, A for availability of reliable relevant data, N for nature of assertion, D for disaggregated data, A for account type, S for source. Everybody who's online right now, if you have understood the factors, write in the chat box, factors done. Everybody is online right now. If you understood the factors, write in the chat box, factors done. So that we can go to the next point. And the last point of SA 520, how to identify if data is reliable. That is, we are actually looking at this point. Okay, chalo, perfect. Now we are actually looking at this point. I told you always you should check that you have reliable data with you. Which data? Reliable data. So, but how will the auditor come to know that the data is reliable? How to identify if data is reliable? Okay, what is the HTR, guys? There is only one HTR you need to remember. You remember the Shri Ram College, right? The Shri Ram College of Commerce in Delhi. What you need to remember, that you remember that is the #1 college in the country, correct? So Shri Ram College of Commerce data is reliable. What is again? Remember, try recollecting. In the exam, they will ask you whether data is reliable. Okay, what is the sentence that should strike you? The SRCC college in Delhi, their college data is reliable. Okay, what is SRCC? S stands for source, R for relevance, C for comparability, and last C for controls. SRCC: source, relevance, comparability, and controls. I'm repeating once again: source, relevance, comparability, controls. Now let's understand. Source we discussed already. When I am comparing my client's gross profit ratio with the industry average, I'm repeating once again. When I'm comparing my client's gross profit ratio with the industry average, I can't just identify doing a simple Google search. Okay, because anybody can put anything on the website. But if it is a government backed report, if it is a report of IBEF, okay, the .gov.in, if it is a report of the government of India which has been published after extensive analysis, and that report is saying that the industry average of your client is 5%, then that is a reliable source. Got it? So always remember, the source has to be very, very reliable. Google is not a reliable source. Point number 2, relevance. What do you mean by relevance, guys? It means that the data that the client has given you, is it actually relevant for your findings? If the data is prepared just for the sake of preparation, then it is irrelevant. Third point is comparability. What do you mean by comparability? Comparability means what? Let's suppose my client is an edtech. Let's take the example of Ekagrata Adda 247. Okay, pay attention. I am comparing the gross profit margin of Adda 247 with the industry average. Okay, now when I'm comparing that, I need to know what is the industry average of the edtech industry. See, because you very well know Adda 247 is an edtech company. In edtech, we are always online. There is no offline. Okay, now in this situation, guys, I can't compare Adda 247 gross profit with the industry average of the education industry, because in the education industry there are so many players. There are offline coaching classes, there are offline colleges, like the colleges, schools, there are other edtechs, there are private tutors. The education industry comprises of everybody. So of course now that data is not comparable. If I need to compare the GP ratio of my client at that 247, then it has to be compared with the GP ratio. It has to be compared with the GP ratio of the edtech industry. Then it will be comparable. And last, controls over preparation. For example, this diagram that I showed you, wherein in the client is telling you that first year we did a advertisement expense of 1 crore, second year 2 crores, third year 2.5 crores, right? And fourth year 4 crores. If this data is given to you by interns, if this data is prepared by the interns and it is not vetted by the seniors, then that data is not reliable. I can't use that data to form conclusions. So remember, whenever the data is given to you, if it is prepared on under proper supervision, then that data is reliable. Got it, bachcho? Done. With that, we have completed the entire SA 520 as well. If you understood SA 520, it's a very simple standard, one of my favorite standards. Guys, if you understood SA 520, then write in the chat box SA 520 done. We first understood what is the meaning of SA 520. Then I taught you all the 5 types. Barabar na? Ratio analysis, trend, reasonableness test, structural modeling, unsophisticated predictive model. Then I taught you the entire process, right? You identify the suitable procedure according to your judgment. After that, you did check if the data is reliable and relevant. After that, you apply the procedure, develop an expectation, compare it with the books. Okay? And then you have to investigate further if the difference is unacceptable. Correct? And then we saw what factors you need to keep in mind when you're applying analytical procedures. That is inherent risk. That is inherent risk of pandas. And last we checked was the when you should ensure that whether the data is reliable. How will you come to know if the data is reliable? SRCC college. Correct? Chalo, perfect. Okay. Chalo. Very good. Now, perfect. I hope all of you guys understood SA 520 also properly. Chalo. Now let's go to the next standard, guys. Let's go to another one of my favorite standards, that is SA 610. Okay, let's go and do 610 now. Okay. Chalo, perfect. Let's go and do SA 610, that is using the work of internal auditor. Okay. Just hold on 1 minute. Yes. Okay. Let's start, guys. Using the work of internal auditor. Now, first thing, we need to understand the difference between who exactly is an external auditor, who exactly is an external auditor, and who is an internal auditor. Okay. A very simple analogy can be drawn by my example. Okay. Remember, I am your internal auditor. Institute is your external auditor. What did I say? I am your internal auditor. Institute is your external auditor. Okay. Basically, what does it mean? It means that any mistake that you do in front of me, it's fine. Any mistake that you do in front of me, it's fine. Okay. That those mistakes that you're doing, okay, those mistakes can be rectified. But remember, always when it comes to the institute, you should ensure that the mistakes are avoided as much as possible. So therefore, remember, the internal auditor who is there, the internal auditor should ensure that he is able to identify problems well in advance, so that the client is rectifying them well in advance before the external auditor comes and identifies them. Got it? So that is the easiest explanation, easiest differentiation between external auditor and internal auditor. Okay. Now let's understand. First thing, what exactly is the work of the internal auditor? Okay. You need to just remember one word, that is oil rig. What is the word? Oil rig. What is the scope of work of internal auditor? Remember, oil rig. Okay. R stands for risk management, I for internal controls, and G for governance. All of this is the job description of the internal auditor. The internal auditor has to ensure that he manages the risk in the organization. Internal auditor is responsible to ensure proper control system is there. Internal auditor is responsible for the governance. Okay. Now, when it comes to internal control also, he has some specific activities. He has to review the entire internal control system. He has to examine the operational and financial information. He has to ensure that the organization is complying with laws and regulations. He has to check the operational activities. All of these things. He has to check the operational activities. Got it? So therefore, these are the things that the internal auditor has to do. Okay, I'm repeating once again. RIG, risk management, internal controls, and governance. Okay, majorly try and understand. He is like a internal guy to the organization who is there to better the processes, to ensure that the financial reporting is better, to ensure that he is able to identify the misstatements well in advance before the external auditor comes and identifies them. Got it? So we saw these 2 points, right? Understanding the scope of work of internal auditor and the difference between internal auditor and external auditor. Now focus on the next point very carefully. As an auditor, guys, SA 610 is actually your friend. As an external auditor, remember, you are the statutory auditor, you are the external auditor who's checking the financial statements and giving the opinion. Remember, SA 610 is actually, your friend. Because SA 610, guys, is the audio clear? Pankaj, Amna, should I hold the mic like this, or even if I'm keeping the mic like this, you're able to hear? Is the audio better now? Should I keep the mic in my hand? I know the volume drops a bit. The volume drops a bit, I believe. Hello. Pankaj is saying he had to use volume booster. Boss, what is the volume booster? ये वॉल्यूम बूस्टर क्या होता है भाई? Drops a bit, I believe. Hello. Zero is actually, your friend. Because chalo, let's go ahead. Is the audio clear? Pankaj, Amna. Okay. Acha, okay. Chalo, let's go ahead. Look at the next point. As I was saying, SA 610, guys, is actually your friend. You know why? Because it allows the external auditor to use the work of internal auditor. Sir, why? Why does it helps you? Because of the fact that, see, there are many overlapping responsibilities of external auditor and internal auditor. For example, reviewing the internal controls. You saw this, reviewing internal controls. That is testing the internal controls. That is a job of external auditor as well as internal auditor. So there are many overlapping activities between both of them. So therefore, in the interest of time, the SA 610 actually comes to help the external auditor, and it is informing the external auditor that you have an option. If you want, you can take the help of the internal auditor's report. Got it? Now, remember the standard now, guys, it will be divided into 2 parts. That is part 1 and part 2. Okay. Majority times the questions are asked on part 2, and part 2 is actually easy. Okay. Now look at what is part 1. Guys, part 1 means there is some work which is the responsibility of the internal auditor, which he was supposed to do. Okay. क्या लिखा है यहाँ पे देख रहे हो? Internal auditor's responsibility, the report that is there, the report by the internal auditor, either it is already prepared or is going to prepare the report, but that is his responsibility. He is going to do that. And as auditor, I want to use that report now. As an external auditor, I want to use that report. So that is part 1. Part 2, part 2 is what? Part 2 is wherein there is some work which is my responsibility, but now I want him to do it. Okay, it's like I am taking the responsibility off my shoulder. I am giving the work that is supposed to be done by me. I am giving that workload to the internal auditor. Basically, I am asking him to be a part of my team. Not literally, but I'm asking him to basically be a part of my team and help me to finish this work. I hope both the difference is clear. Here, internal auditor, the work that internal auditor is doing, it is his responsibility. His NUH is supposed to do it. But here it is not his responsibility, it is my responsibility. But now I am basically putting off my work to him. Got it? That is part 2. But we'll discuss about part 2 later on. First, let's close part 1. Okay. Remember, whenever I decide to use the report that internal auditor is preparing or the report is already prepared, I'm repeating once again, whenever I decide that I want to use the report that the internal auditor is preparing or the report that is already prepared, at that time I need to check OLA. What I need to check is OLA. Remember, all the three should be there. OLA. O stands for, guys, objectivity. I need to be sure that the internal auditor is an unbiased person. Internal auditor is an unbiased individual. I need to be sure that his nature is such that he is a very objective guy, unbiased person. Point number 2 is that I need to be sure that he is a competent person. His level, L for level of competence. This person should be a competent person. He should be, let's say the internal auditor also is a chartered accountant. Then I'm sure about his level of competence, right? You should ensure that you check that he has the relevant experience. So he should be a competent guy, because I'm going to use his report. If the person who is doing that work, if he's an idiot, I will not use the report of an idiot. And last, that approach should be systematic and disciplined. Now, why exactly are you guys, why exactly are you guys sitting here? Because as you can see, the approach that is there in this, the approach for this marathon, as you can see, it is a very systematic approach, right? You can see the targets are here. We know what exactly we have to do in day 1, day 2, day 3. We know which notes we are referring to. The notes link is given to you, right? So therefore, it is a mechanism which has made your life very easy. So the approach, if the approach of the class is disciplined, it is a very systematic approach. That is the reason why you're sitting here and watching this video. Similarly, as an external auditor, if the internal auditor's approach is systematic and disciplined, there is a high chance that the quality of his work will be very good. The report will be very good. And then that is the reason why I will use his report. Sir, Disha Trivedi has a question, sir. How many points should we write in exam? Beta, but in which question? Which question are you referring to, Disha? How many points should we write in the exam? Can you please just throw some light on that? Guys, see, from the new syllabus, this is a very important question, by the way. The new syllabus has completely changed the picture for everybody. Okay. The institute has stopped asking straightforward questions. You're not going to be getting straightforward questions. What you will be getting is case study based questions, right? One example that I gave you some time ago when we were doing this essay 530, I told you guys that institute had asked this, bravo na? See, in the olden days, institute would have asked, explain the approaches under statistical approach, explain the sample selection methods. Okay, and then you have to write big paragraphs. You have to write 2 pages. Okay, all that is gone. Now institute is going to ask you a case study, and they will ask you which method is applied here. Institute will give you a case study and tell you which is the most suitable technique to be applied here. Well, beta, so therefore now the more perspective is on quality or quantity. So maybe it might so happen that your answer is just 5 points. Okay, answer just 5 points, half a page, still you get full marks if your answer is bang on, if your answer exactly matches the study mat. Got it, Disha? Okay, so remember, now the entire dynamics has changed. Now it is completely concept based. Okay, beta? Chalo, let's move ahead. Okay, now I told you step 1. Step 1 is that auditor has identified that I want to use the internal auditor's report. Step 2, I need to check if the internal auditor has OLA. But how? How the hell will I know if this guy has Ola? How the hell? How the hell will I know if the internal auditor has Ola? Is it like a X-ray vision to understand that if this guy is objective or no? How will I know that this guy is an objective person? I have met him for the first time. I have met him for the first time, right? I'm doing the audit for the first time. How will I know if the internal auditor is an objective person? He's an unbiased person. How will I know? Will I in the first meeting I'll understand his competence level, how knowledgeable person he is? Will I know his approach? No. So therefore, don't worry. There also the institute is helping you. There also 610 tells you. See, I have written here for factors. Refer next chart. I have given a chart out here on the right hand side. See, and mind you, everybody who is watching this session, this is the new part in your study mat. Okay, it was not there in old syllabus. Mind you, 610 was never there in the old syllabus at the inter level. At the inter level, institute always looked down upon 610, but in the new syllabus, this entire standard is there. And in fact, you won't believe it is much more in detail as compared to final. This standard is there at the final level also, but in final level, the institute has not gone in that much detail. For example, this entire part, this chart, this new chart, which is there at the inter level, is not there at the final level. So you have to be focused very well. I have a very high gut feeling that this is a gut feel question. Out of these three, any one you will definitely encounter in the JAN exam. Okay. See, factors to be taken into consideration. Factors questions are already important. Factors to be taken while evaluating objectivity. Okay. The first thing as an auditor you need to be clear is that whether the organization status supports objectivity of the internal auditor, that is that internal audit department free from bias, undue influence and conflict of interest. Basically, does the organization, that the client, does the client allow internal auditor to operate separately? Does they do they indulge a lot with the internal auditor? Are they interfering in the work of the internal auditor a lot? Okay, you need to check if whether the internal auditor is being allowed to act independently. Got it? That is point number one when you're checking objectivity. Point number two, whether TCWG oversees the employment decisions of internal auditor. Okay, means what? Think about it. If the CFO controls the bonus of internal auditor, what will happen? The internal auditor in the greed of bonus will do everything what the CFO says. So therefore, where is the objectivity? Where is the unbiased nature? Got it? So remember, if the TCWG is controlling the employment decisions of internal auditor, means that the department lacks objectivity. Point number two, any limitations, constraints placed on the internal auditor. If the internal auditor is not allowed to do something, if the internal auditor has been restricted to do something, means they are being biased, they are not unbiased. And last, whether internal audit function is free from any conflicting responsibilities. Means has the TCWG just kept the internal audit department as a puppet? They have loaded them with so much work that their actual work they are not able to do. Got it? So if all these cases are there, guys, if any of these cases, any of these 4 points you see at the client place, means the department lacks objectivity. Next, if you want to check the level of competence, what you should check? You should check whether resources in the internal audit department is commensurate with the size of the entity. Means what, guys? Imagine if it's Reliance Industries, and in Reliance Industries internal audit department there is only one person. Impossible. That person is incompetent to see. He might be a chartered accountant, but only one person in the internal audit department of Reliance Industries, that person is incompetent to handle such a workload. Got it? Point number two, whether policies are established for HAT, H-A-T, hiring, assigning, training internal auditors. If there are proper policies in place for hiring internal auditors, let's suppose we hire only chartered accountants and internal auditors, for assigning the internal auditor to particular work and training them. If there are proper policies in place, then I can be very well assured that yes, the internal auditors have the proper level of competence because they are hired well, they are assigned work well, and they are trained well. And last, technical training and proficiency. What exactly is the background of the internal auditor? Does he have knowledge of financial reporting? Does he have knowledge of AFRF? All these things you can simply ask questions to the internal auditor to get an understanding, right? Does he know what is Schedule 3? Does he know the Ind AS? Does he know the accounting standards? Okay, when you inquire with the internal auditor, you'll understand what is his level of knowledge. Okay, last point. In order to understand if the organization if the internal audit department follows a systematic and disciplined approach, what you need to check? You need to check the existence, adequacy, and use. Pay attention, huh? You need to check the existence of documented procedures, adequacy of documented procedures, use of documented procedures. You need to check the existence of document procedures, adequacy of document procedures, and usage of documented procedures is by the internal audit department, and whether it is commensurate with the size and nature of the entity. If they're using these documented procedures, means it's a good technique, right? It's a, as you can see, I'm not teaching you on the fly. What I'm doing is that I'm teaching you from documented, these everything is properly documented and shared with you. That is where it is giving a proper disciplined approach, right? Similarly, the internal auditor, when he's working, he needs to have a documented procedure. If the document procedures exist, if they're adequate and they're using it, then the approach is good. And last point, whether the internal audit department has quality control policies, which we see in SQC1. If the quality control policies are there, then the approach is very good. Got it, guys? Now I'm telling you again and again, I'm repeating, this is a new point added for your exam. Okay, please ensure that you do this chart very well. Okay, I have a high gut feeling any one of the question can come in your exam. How to check objectivity, how to check level of competence, how to check the approach. Now, once we are very clear that the OLA exists, once we are very clear that in the internal audit department OLA exists, okay, all the three, there can be two outcomes of this exercise. Either any one or all of them is absent. Anyone means objectivity is not there, or competence is not there, or approach is not good, okay, or all of them is not there. Then in that case, say thank you so much internal auditor, but we don't need your report. Okay, say thank you to him, we don't need your report internal auditor. But guys, let us suppose if all the three are present, OLA is present, okay, then in that case, external auditor, still pay attention, still I cannot use the report directly. Okay, OLA is there, objectivity is there, competence is there, approach is, still I can't just snatch the report from him. I have to perform review procedures. Means I have to check that the procedures performed by internal auditor, what the work that he has done, I need to check the procedures performed, I need to check the evidence that he's obtained, and I need to check the conclusions he is reached. Okay, I need to check the mechanism of doing the work. Okay, for example, control testing. If he has done control testing, you remember I wanted the report on control testing. Okay, so therefore what I did, I checked the OLA, I saw that the OLA is there, I asked him, please give me your control testing report. I will review that report. I will check what all procedures he has done to test the controls, the conclusions that he's reached. If I'm satisfied, then I will use the control testing report. If I'm not satisfied, I will not use the control testing report. Got it? Okay, people who are online right now, please write in the chat box if you understood part 1. Write in the chat box part 1 done. Write in the chat box part 1 done. So that we can go to part 2. Perfect. Okay, very good. Okay, any doubts in this chart, guys? Any doubts in this separate chart? If there are no doubts, write in the chat box no doubts. Okay, perfect. Okay, perfect. Chalo bachcho, let's go to the next point. Part 2. Part 2. Now, as I told you earlier also, in part 2, I am basically shifting my work to him. Got it? That's why I look at the sentence. It is external auditor's responsibility handed over to the internal auditor. Therefore, the word that we use is called as direct assistance. So remember guys, always when you're taking direct assistance, look at the word direct assistance, right? I have my engagement team. I am the external auditor. I have my engagement team, but still I want some work to be done by the internal auditor. Now see, it is quite unnatural, right? This is not a normal way of doing audit. So therefore you should check if the law and regulation allows you to do this. See, if the law and regulation does not allow, law and regulation clearly says, let's suppose, imagine the Companies Act says that ki the auditor cannot take direct assistance from internal auditor, then you cannot do this. Okay, the standard ends there for you. But let's suppose the law and regulation allows, or the law and regulation is silent on this matter. Okay, then I am going to be transferring my workload to the internal auditor. But when I'm doing that, of course, I will not transfer my workload to an idiot. Therefore, again, I need to check what OLA, right? I have to check if the OLA is present. But objectivity is there, level of competence and approach. If these three things are there, only then I will transfer my workload to him. I will take direct assistance. So for example, if OLA is absent, right? If objectivity is not there, any one of them is not there, objectivity is not there, level of competence is not there, approach is bad, take care, all the three are bad, take it, then in that case guys, I will say I'm sorry, I will do the work, I will not transfer my workload to you, internal auditor, I don't want your direct assistance, right? Which makes sense, right? That's a logical thing to do. However guys, if at all you're very clear that now the OLA is present, means the person is a competent person and you can take his help, because the law is also allowing you, law is not restricting you, and the OLA is also present. Now before you transfer your workload to him, standard says external auditor please enter into two agreements. Agreement number 1, enter in that agreement with your client, that external auditor and the client, and in that you have to ensure that the client agrees that they are not going to interfere in the work that we allot to the internal auditor. Got it? I'm repeating once again. Ensure that you enter into two agreements. Agreement number 1 with the client, wherein the client will agree that they are not going to interfere with the work of internal auditor. And agreement number 2 is that I will enter into this agreement with the internal auditor and I will ensure that he agrees to the fact that he will maintain confidentiality. He will not go and blabber everything to his client. And next point, he will inform me if there is any threat to his objectivity. Let's suppose you give a very important task to the internal auditor. Let's suppose you give the task of collating some data, and you know what, if the client is coming and hijacking that work, if the client is coming and saying that no, don't collate this, don't do this, therefore clearly the client is trying to ensure that he is not able to do his work properly. So therefore the internal auditor has to inform you if there is any threat to his objectivity. Once both these agreements are entered into, pay attention very carefully, once both these agreements are entered into, after that you can take his direct assistance. Okay, once both the agreement entered into, after that you can allot work to the internal auditor. Got it? But there is again a problem, guys. The standard SA 610 says that external auditor, you can't allot any work to him. Okay, you have to ensure that the work that you're allotting does not fall in the negative list. Now mind you, this negative list is a term that I have coined. Okay, this negative list is not there in 610. Okay, this word negative list is not there in 610. I am telling you that there is what I'm writing in the chat. Okay, that just remember, the work that is being allotted to the internal auditor should not be a part of negative list. Okay, basically it should not be a work which is a highly risky work, because if it is highly risky, external auditor should do it, right? What are we paying? What is the client paying you for? The client is paying me money to do audit and highly risky work I will allot to the internal auditor. What sense does it make to hire me then? Got it? So remember, highly risky work I will do. Next, work that requires significant judgment I will do. I can't take his help. Third, work that is already performed by internal auditor, I can't ask him to do it again, right? So that I can't transfer. And last, any decision with respect to SA 610 means whether the work should be transferred, whether the objectivity is there, or any decision with respect to SA 610, I will take. I will not ask him to take. Got it? If at all the work that you, if at all, the work that, if at all, the work that I'm allotting to the internal auditor is not of this category, then I can give the work to him. But remember, I can't just give the work. I have to give him proper direction. I have to supervise the work and review the work that he is doing. Got it, bacho? Is the part 2 also clear to you? Very simple. I'm just giving you an entire quick recap in 2 minutes. Okay? Pay attention. We are seeing using the work of internal auditor. We saw the difference between both of them. I told you I am your internal auditor, instead is your external auditor. We saw that the work of internal auditor is oil rig, RIG, risk assessment, internal controls, governance. After that, we saw that SA 610 is coming to your help. It is allowing you to take the help of internal auditor, right? Hi, only target NDA. Okay, hello Sarji. Hello beta. It is allowing me to use the work of internal auditor, and it is divided into two parts. Part one is the work that he is already supposed to do, and now I'm taking the help of his report. Example, control testing report, right? I can take his help provided the internal auditor has OLA, OLA. If the OLA is present, then I can use his report, but I have to do the review procedures. And after doing the review procedure, I'm satisfied. Then I will use the report, or else I will not. And last point, that is part two. If at all I am taking his direct assistance, if the law and regulation does not allow, then you can't take his help. If the law and regulation allows, then you can take his help, provided the OLA is present. If the OLA is present, ensure that you enter into 2 agreements. Okay, once you enter into 2 agreements, after that you can allot the work to him, but it should not form part of a negative list. And after that, you allot the work to him, but you have to give him proper direction, supervision, and review his work as well. Okay, everybody in the chat box, people who are online right now, if you have understood SA 610 also, write in the chat box SA 610 done. I'm just coming back in a minute. हेलो, चलो चलो guys, let's go ahead. Okay, now let us go ahead and start with the next standard for today. Okay बच्चों, we can now, before the break we can finish one more standard. Let us close 510. Okay, okay बच्चों, चलो let us close 510 now. What do you mean by 510? Okay, 510 speaks about initial audit engagement opening balance. What does 510 speak about? It talks about initial audit engagement opening balance. Okay बच्चों, now first thing we need to identify the definition of initial audit engagement. What do you mean by initial audit engagement, guys? Very simple, look here. Initial audit engagement means an engagement wherein the last year financial statements were not audited. Last year financial statements were prepared but they were not audited, or last year financial statements were prepared, they were audited but they were audited by somebody else, not you. They were audited by the who is that person called as, in this standard we are going to call him as a, we are going to call him that person as a predecessor auditor. What is the word? Predecessor auditor. Got it? Okay, so I'm repeating once again. Initial audit engagement means what? An engagement wherein the last year financial statements were not audited, or last year financial statements were audited but they were audited by somebody else, and now you are there in the picture. Now you're the one who is basically who is going to do the audit from this year. So therefore when we are doing the audit from the current year, it is very obvious that we are more concerned with the current year numbers. But SA 510 is casting an additional responsibility on you, is that you have to check the opening balances as well. Because if the opening balances are not checked, automatically it will have a cascading effect on the closing balance. If the opening balances are incorrect, automatically the closing balance also will be incorrect. So therefore the standard is casting an additional responsibility on you to check the opening balances as well. Okay, the other points are very simple: opening balance and the predecessor auditor, right? The auditor who was there before you, he is the predecessor auditor. Okay, now what is the objective of the auditor in accordance with SA 510? The objective is very simple. The objective is to obtain evidence whether opening balance contain any misstatement. Because I told you the cascading effect right now. If the opening balance contains any material misstatement, automatically it will impact my current year numbers also. So the objective is to ensure, objective is to obtain evidence whether the opening balances contain any material misstatement. That is point number one. Another objective is that to check whether appropriate accounting policies which were applied last year, have they been consistently applied in the current year. And if there is any difference, if there is any change in the policy, then whether the change has been properly disclosed. Got it, bachcho? So first thing, I want a confirmation from everybody who is online. Did you understand? If you understood objectives, write in the chat box objectives done. If you understood the objectives of the auditor, write in the chat box, because you need to be very clear that what are we doing in this standard. In this standard, my only goal is to check if the opening balance contains any misstatement, and my goal is to check that if the current last year's accounting policy was consistently applied. Are you clear? If you understood the objectives, write the word objectives. Done. Break will start at 8 p.m. 8 p.m. to 8:30. The break will be there for half an hour. Got it? Chalo, perfect. Okay. Let's go ahead. Now the next thing. What are the answers that we need to study now? Once we have understood the definition, we have understood the objective, we need to study factors affecting nature and extent of audit procedures. Okay, what do you mean by this? Now, when I am going to be checking the opening balances, how much procedures, how much in depth I need to go depends on what factors. I'm repeating once again, understand the question, because they can draft the question in any format. Okay, you need to decipher, you need to understand what the question is saying, and then understand that okay, it is falling in this place. Got it? So the chart is a mind map that should be there in your mind. Okay, the question is, if at all I'm very clear that I am the auditor who's auditing this year, I have to check the opening balance, then how much in detail procedures I need to do, and if I'm doing these procedures, then which procedure I should apply. Okay, it depends on which factors. Got it? That is point number one. Point number two, if we are applying the procedures, then which procedures should we apply? What are the procedures that we should do in, as according to SA 510, what procedures we should apply? So this is the depth of the procedures, how much procedures you have to apply, what is the extent of the procedures. Okay, and which procedures will apply is the next answer. Got it? And last thing which we have to see is the reporting stage. What is the outcome of these procedures? Got it? Okay, let's start. The first point, focus very carefully. Huh? Pay attention, guys. Pay attention. What is the HTR? I've given an HTR also, guys, here. Previous year Romans. What is HTR? Previous year Romans. Okay. So the first point you need to know is the previous year financial statements. Pay very careful attention. Guys, if the previous year financial statements were audited, right? And if yes, did the predecessor auditor, did the predecessor auditor issue a modified opinion? You tell me, if the last year's audit report was modified, what does it mean? It means that some amount, some balance, or some transaction was misstated. Now, if that was misstated, it is very obvious that that closing balance will become my opening balance. So therefore, now I need to do additional audit procedures to check. I need to check in detail if that is rectified in this year or no. I hope the first point is clear to you. Previous year. Okay. Next, what do you mean by Romans? ROMANS. Guys, ROM stands for risk of material misstatement. A stands for accounting policy. N stands for nature, and S stands for significance. Got it? So previous year Romans. Okay, previous year Romans. ROM stands for risk of material misstatement. If the auditor believes that there is high risk of material misstatement, that is, if there is a high risk of material misstatement, automatically you have to apply more audit procedures. Got it? Very simple. Next, then accounting policies followed. Guys, if the client is following very complex accounting policies, then it is very obvious auditor needs to ensure that he is checking the opening balance also in detail, because the accounting policies are very complex. Next is the nature of account balance, class of transaction, and disclosure. Okay, what does it mean? If at all the disclosures are very, very significant, okay, if the nature of the account balance is very enormous, Okay, then in that case, guys, you have to ensure that you check the opening balance also properly. Okay, for example, let's suppose in the case of a pharmaceutical company. In the pharmaceutical company, research and development is a very important amount, right? So therefore that auditor needs to check in detail. Okay, the nature, and last is the significance. Means what? How big is the opening balance? If the opening balance is very significant, you have to ensure that you do more procedures to identify if the opening balance contains any misstatement. So five things you need to know. Previous year Romans. If the previous year financial were audited and the predecessor auditor gave a modified report, then of course there is some misstatement. You have to check that in much more in depth, right? Or if high risk of material misstatement, more procedures. ROMA for accounting, complex accounting policies, more procedures. ROMAN is nature. If the, for example, I told you research and development expense, more procedures. And S is significance. If the amount is huge, more procedures. Got it? Chalo. Let's go ahead. Now the next point. Next point, we have to see which procedures the auditor has to perform when it comes to SA 510. Pay attention very carefully. First do the arithmetical checks. Basically means what? Determine if the prior period closing balance is correctly brought forward. This is the basic point. One second. This is not something. This is not something that. One second, guys. Yeah, sorry. I'm saying that. हाँ बच्चों. One second. What happened to this? Okay, sorry. हाँ बच्चों. Now pay attention. First point is check the arithmetical accuracy. Check if the prior period closing balance is correctly brought forward. But this is something which you do in your accounts paper also. You ensure, right, the closing balance is correctly brought forward. So therefore, first simple procedure, check that. Point number 2. Check if any adjustments have been disclosed as prior period items in the current year P&L. In the current year, if there are any adjustments termed as prior period item, so you need to check that very carefully, because what is prior period items? It is the mistakes of the previous year, right, which you are rectifying now. So therefore ensure that you pay close attention to prior period items. Next, determine if the opening balance reflect appropriate accounting policy. This is something which we saw in the objective also. Check if the opening balances reflect proper accounting policies. Basically check if the accounting policy of last year is consistently applied in the current year. So same thing what we read in the objectives, you have to check now. Point number 4, peruse prior year audited financials plus other relevant documents. Guys, what is the meaning of this word peruse? Peruse is to read and understand the prior year audit financials, read other relevant documents, probably the audit report is there, read those things properly. Next point number 5. If this is very important. Now the next 2 points, point number 5 and point number 6, are the heart of this standard. If you understand this, then the standard is over. Okay, because the reporting is nothing, it is just one second. Sorry, I thought it was an important call. Okay, guys. I was saying that you have to focus very carefully on point number 5 and point number 6. Now, pay attention very carefully. The first 4 procedures are very simple, correct? The first 4 procedures are very simple. You simply check the closing balance becomes opening balance. you paid attention to prior period items, you determined if the accounting policy is consistently applied, and you have properly read and understood the prior period financial statements. Now, I was given the task to audit the current year numbers. When I am auditing the current year numbers, there is a high probability when I'm auditing the current year figures, when I'm doing the audit of the current year, automatically I will gather evidence regarding some opening balance. For example, let's suppose last year 31st of March, there was an outstanding debtor balance worth 10 lakhs. And on 10th of April, the client received a check from that person for 10 lakhs. And I saw that that money is credited in the bank account. The entry is also passed. Bank account debit to debtor. Pay attention, 10th April, the client received 10 lakh rupees. Because it is falling in this current year, I need to check that. So when I saw that the client has received 10 lakh rupees, I will inquire which is this money. The client said, see sir, last year we had sold this, last year we had sold goods to this debtor and this debtor has paid the money now. So the balance of 10 lakhs which was shown as on 31st of March, which became the opening balance of debtor in that ledger, that ledger is now closed because that outstanding balance is now the outstanding balance is now cleared. The client has received the money. So now in this case, see, you did not perform any additional procedure. What you were any which was going to do in the current year, it gave you details, it gave you evidence, with respect to opening balance. See, look at the sentence now. Evaluate whether current year procedures provide audit evidence with respect to opening balance. I have given the example also, debtor opening balance or creditor opening balance. If it's a debtor, then in the current year you will have received money. If it was a creditor opening balance, in the current year your client must have paid the money. Got it? But see, this kind of luck, this kind of shortcut will not apply in all areas. See, so the standard understands, institute knows that in all places you will not be so lucky, right? See, for some items, auditor will have to perform some specific audit procedures. For example, inventory. Okay, when it comes to the opening balance of inventory, okay, students who attended my class yesterday, we did stock audit in so much detail. You remember when we did SA 501? See, look here. When we did SA 501, I taught you the HTR, evaluate IPO records. Do you remember? This is everything that you have to do when you're going for stock audit, but I will go for stock audit for the current year, right? I was not there in the last year's stock audit. So how will I know the opening quantity of the inventory? Because I know the inventory of this year. This year 31st March, I know for the year which I am signed up for, the year for which I am engaged for. I know the quantity for this year, but I don't know the opening balance. Therefore, what should the auditor do? Remember, in this situation, the auditor should observe, first of all, go and observe the current year stock count, right? Which you have to do as per SA 501. And you reconcile the opening inventory quantity, means the current closing, then you add less the purchase and sales of the current year, and therefore you'll come to the opening quantity. Got it? That is what you can do. You can also perform procedures on valuation of the opening inventory. You can check the gross profit. You can do backward calculation using gross profit, and you can do the cutoff procedures. So these are the additional procedures that you should do for inventory. Okay. When it comes to, for example, some non-current assets or liabilities, for example, property, plant, equipment, investment, opening balance. You want to know the opening balance of the property, plant, equipment. You want to know the opening balance of loan. What can you do? You can examine the records, examine the loan agreement, and get an external confirmation. I can simply ask the bank, when you're telling me the bank balance as on the loan balance as on 31st March 25, please tell me the loan balance on 31st March 24 also, right? So you can get an external confirmation from the bank for the loan balance. So the moral of the story is that for some items you have to do specific procedures. For some items, your current year procedures only may help you with the opening balance, may help you with getting evidence for opening balance. Now, what is the next step after performing these procedures? If you believe that there are material misstatements that you have identified in the opening balance, then you determine their effect on the current year financials. If you believe that the opening balance is misstated, you determine the effect of the misstatement in current year financials, and you communicate the misstatement management for rectification, right? Management, you tell the management TCWG that please rectify this because this is incorrect. Got it? Now, the last part. Let us suppose the client has now rectified the misstatements. You believe that the opening balance now is not misstated. Accounting policy also is consistently applied, and any change is also appropriately disclosed. Clearly, you can give a unmodified opinion if there are no other misstatements, because you are very clear with opening balance में कोई problem नहीं है. There is no problem when it comes to opening balance. But guys, if the client is not ready to rectify the opening balance, means opening balance is misstated. The accounting policy is not consistently applied, or you identify this is or this is not and, this is or accounting policy is not consistently applied, or any changes in the policy is not appropriately disclosed, you will issue a modified opinion. Got it? Okay, all the people who are live right now, I hope you have understood 510 also conceptually. Are we clear with 510, guys? If you are clear with 510, write in the chat box 510 done. Okay, with that, we are through with a good amount of our target for today. We just completed 510 also. Barabar na? Okay. Guys, once we return back from the break, we still have 1, 2, 3, 4, 5 standards to go. I estimate between 8:30 to 10 o'clock. 8:30 to 10 o'clock will be required to complete these, because this is a small standard. This is a small standard. This is a small standard. So 4 small standards, or actually all the 5. Actually, all the 5 standards are very small. Okay, so that's why even if we take 20 minutes per standard, so 20 minutes into 5, that is 100 minutes. Probably 1 hour 1 hour 40 minutes will be required from 8:30 to complete all of this. Got it? Understood, guys? Chalo, clear? Perfect. Take your break now. Rejoin at 8:30. Rejoin at 8:30 after the dinner break. Okay. हेलो। चलो बच्चों, लेट अस रीस्टार्ट। ओके, तो बच्चों, एज यूर अवेयर ऑफ, वी हैव टू स्टार्ट विद द नेक्स्ट स्टैंडर्ड नाउ। एक बार मैं चैट देख लेता हूँ। आई होप ऑल ऑफ यू गाइज हैड योर डिनर। चलो, let us go to the next one now, guys. Okay, so the next standard that we are starting off now is SA 550, that is related parties. Okay बच्चों, चलो, let us start with SA 550 now. Pankaj, as I told you, at least 20 minutes per standard will be taken. Okay, so what are standards are left? 20 minutes per standard will be required. Okay, guys. Now, SA 550 discusses about related party. Okay. Now, as you're aware of, when it comes to related party, first we need to understand what is the definition of related party. So, guys, SA 550, Standard on Auditing 550, says that there may be circumstances wherein the applicable financial reporting framework is providing a definition. The AFRF is providing a definition which we all know. For example, in our case, right? In our case, when it comes to the accounting standards, the AS 18 very well provides a definition for related parties. Correct? However, SA 550 goes one step ahead. SA 550 goes one step ahead and says that कि suppose the applicable financial reporting framework does not provide a related party definition, then what you should do? Then in that case, the auditor should identify related parties using the definition given by SA 550. So be very mindful of this point. The definition given by SA 550 of related party, remember, will get activated only in specific cases. I'm repeating once again. Vignesh has sent a very, very good message. Thank you for making this marathon in English, sir. Appreciate it. Vignesh, thank you so much, beta, for your kind words. Okay, I'll keep coming up with more videos in English, so that just one request, Vignesh, please ensure that you share this video with all your friends. Okay. चलो बच्चों, हाँ, the next point that you need to understand is the AFRF. If the AFRF, guys, is silent, or the AFRF provides minimal requirements for related party, what should the auditor do in such case? In such case, you need to follow the definition as provided by SA 550. Okay, so that the auditor is able to identify which are the related parties. First thing, SA 550 says that any person which has any person which has a control or significant influence over the reporting entity. Now reporting entity means what? The client. Remember in SA 550 reporting entity means the client. So let's suppose my client is X Limited. Let's take a simple example of Geo. Now let's suppose Reliance Industries is the holding company of Geo. So therefore, can I say Reliance is having a control on Geo? So therefore, if my client is Geo and Reliance is having a control on Geo, both of them will be termed as related parties. Got it? Another example, any person on whom the related party has a control or significant influence. So if my client is controlling somebody, or if my client has a significant influence on somebody, then in that case we will call it as a related party. And last, if there is a common link, if there is a common management, for example, owners are common, or owners are very close family members. Remember, when there is a common link, then those entities will be termed as related party. For example, Mukesh Ambani is the managing director of A Limited and B Limited. Because he's a common owner of A and B will become related parties. Got it? Let's suppose Aakash Ambani and his sister, what I forgot is the name of his sister, Isha Ambani. Okay, let's suppose Aakash Ambani is the owner of A Limited, Isha Ambani is the owner of B Limited. Now because Asha क्या बोल रहा हूँ मैं? Sorry, not Asha Ambani. Akash and Isha Ambani both are related brothers and sisters. They are close family members. Therefore, A Limited and B Limited will become what? Related parties. I hope the logic is clear to you. But remember, this kind of logic does not apply when it comes to a government entity. Pay very careful attention. This kind of logic does not apply when it comes to government entity. Sir, why? Why this logic does not apply in the case of government entity? The reason is that, guys, because see, suppose central government is holding 60% stake in A and B, A Limited and B Limited. So therefore, it's very obvious that central government is a common owner. So by common ownership definition, A Limited and B Limited will become related parties, right? But in this, if you apply this logic to government entities, all government entities will become related parties of each other, right? So therefore, remember, there is a exception out here. The government entities, in the case of government entities, they will be termed as related party only if they enter into significant transactions. Only then they will be termed as related parties. Okay. Chalo. With that, we have understood the first definition very easily. Okay, I'm repeating once again for all of you. The related party definition given to you by your applicable financial reporting framework, the client needs to apply that. Auditor also needs to pay attention to that definition to identify related parties. However, if the AFRF is silent or it provides minimal requirements, then whatever is given to you by SA 550, you have to follow. Basically, then in that case, the auditor will identify these related parties and will ask the client to disclose them in the financials. Got it? Now, point number one, what is the management responsibility in this point? Guys, try and understand. As a client, when I enter into a related party transaction, there is a high chance that the transaction may have happened at other than arm's length price. It might have happened at a non-arm's length price, right? So therefore, there is a high risk in those transactions with the related parties. So therefore, it is important for the client to identify what is their responsibility is to identify all the related parties. It's true, it is important for them to identify all transactions with related parties and disclose the above in the financial. So remember, we are going to be looking at two words, RPR and RPT. What are the two words? RPR and RPT. Okay, identify all related party relationships. Okay, what do we call it as? We call it as RPR. Okay, so it is the client's responsibility to identify all the related party relationships. It is a client responsibility to identify all transactions with them, and then in the financial statements, the client has to disclose. The client has to disclose all the related party relations, and they have to also disclose all the related party transactions. That is a responsibility. Okay. What is the auditor's responsibility as per SA 550? the auditor has to remain alert for all the related party transactions. Got it? All the related party transactions the auditor needs to be alert with, because there is a high chance that these transactions may be misstated. Got it? And remember, when the risk is high, when is the risk of related party transactions high? When the structure of the client is very complex, means A is holding into B Limited, B is holding into C, C is holding into D, D is holding into E. So the structure is very complex, guys. Then in that case, there is a high risk of material misstatement. There is a high risk of material misstatement when it comes to the related party transactions. Point number 2, if the transaction has happened at other than if not at arm's length price, or if it has happened, or that it has happened without consideration, means it has happened free of cost. In these situations, guys, what happens is that the transaction, if it has happened at other than arm's length price, not at market price, then in that case there is a high risk of material misstatement. And last, if the client's information, by the way, this question came in the exam, either in September 24 or May 24. If the client has ineffective information systems, then there is a high risk of related party transactions being misstated. Got it? So remember, auditor's responsibility is one, to stay alert, and he has to ensure that he is able to identify the risk of material misstatement when it comes to related party transactions, and the risk will be higher in these 3 cases. Okay. Now, the next point. Now, how will the auditor understand related party relationships and transactions? See, the client must have disclosed the transactions and the parties in the financials, but is that list complete? We don't know. We don't know if that list is complete. In order to understand if that disclosure is proper, if that disclosure is complete, that is where, guys, the auditor has to perform procedures given by 550. And what are the procedures? Auditor has to inquire with the first thing that the auditor will do, I will ask the client. I will ask the inquire with the management, identity of the related parties, that is including the changes from last year. Let's suppose last year there was a client wherein the company had invested 10%. There was a company where your client invested 10%. Now this year, let's suppose they have increased their stake to 60%. Now last year it was a minor investment. Now the company wherein your client has invested has become a subsidiary. So there's a change from last year. So ask your client if such situations have happened. Ask your client itself, please tell me what are all the, because it's the most easiest thing, right? Instead of you spending time and identifying, ask the client straight up, okay, what are the related parties that you have identified? Okay. Point number 2, ask them what is the nature of relationship with that party. Is it a associate, subsidiary, joint venture? What is the nature with that party? And last, if the transactions have been entered into with the related party, you need to check what is the type and purpose. Okay, what type of transaction entered? It is a buying transaction, selling transaction, and what is the purpose? Why have you done that? See, try to understand, it is not always the case that all related party transactions are fraudulent, or all related party transactions have high risk. Because see, many a times, for example, think about the Tata Group. Now Tata Motors is buying chemicals from Tata Chemicals. It is getting the technology for its new car from TCS. So it is a related party transaction. Their own group companies helping them, but it is not necessary that that transaction will be a highly risky transaction. They may have operated at market price as well. So therefore you need to understand the type and the purpose. Okay. Point number 2, inquire with management and others about existence of an internal control system. You need to check with the management whether there exists a proper internal control system. If the internal control system can, and check if the internal control can identify accurately, identify accurately for and account for and disclose related party relationships and transactions. Check if the control system is able to do the job it is supposed to do. Is it able to identify the transactions? Is it able to identify the party? Is it able to account for, take into consideration all transactions, all parties? Is it able to disclose all transactions, all parties? Got it? And last, is the accounting system so good that it is able to authorize and approve the significant transactions and transactions outside the normal course of business? How is the control system when it comes to authorization and approval of significant transaction with related party and transaction outside the normal course of business? Because see, If the control system is bad, such transactions can easily happen, right? The significant transactions can happen with related parties, and that too not at arm's length price. So therefore, it is very important for us to understand the control. If the control system is good, auditor can be rest assured that yes, all the parties and transactions are disclosed. Okay. So I'm repeating once again, pay very careful attention to SA 550. Point number 1, guys, we discussed the definition. We saw who is the related party. Point number 2, we saw what is the management's responsibility. It is management who should identify the party, identify the transaction, disclose the transaction. What is the auditor responsibility? Is to remain alert, because there can be a high risk when it comes to related party transactions, especially high risk in these 3 cases. Point number 4, we saw how will the auditor understand related party relationships and transactions. He will do 2 things. One, he is going to inquire with the management itself, and he will check the existence of a adequate internal, he will check the existence of adequate internal control system. Okay, next point. What considerations are specific for smaller entities? What are the considerations specific for smaller entities? Guys, in the case of smaller entities, usually, the owner or the owner manager, he himself is the TCWG. In small entities, there are less formal control, like sole proprietors and all. There is less formal controls. There is no documented process for dealing with RPR and RPT, right? There is no document, because it's a small entity. What formal process they will have? Okay. So remember, in these cases, there can be a chance that active involvement of owner or manager will reduce the risk of metal misstatement with respect to related party relationships and transactions. Okay, so I'm repeating the whole point once again. What are the things that auditor should bear in mind when he is auditing a small entity? Okay, in the case of small entity, the owner manager itself is the TCWG. There are less formal controls in the organization. There are very less documented procedures in the organization for dealing with related party relationships, and active involvement of the owner manager reduces the risk. But what should the auditor do in this case? First thing, he should inquire with the management. Check with the management that the inquiry which I just told you, check what are the transactions. Ask the management itself that what are the transactions have you entered, is there any related party. Observe management's oversight and review activities. Is the management properly, is the owner properly keeping a check on all the activities? And last, inspect the relevant documents. If there are any documents, then inspect that. These are the procedures that you have to do in the case of when you are basically, these are the consideration that you should take into you should pay attention to when you are auditing small entities, and especially from a related party standpoint. And the last answer is a very simple answer. Sources to understand RPR and RPT. Which all documents should the auditor look through to basically gain an understanding of the related party relationships and transactions? Okay. See, majority of these words start with the letter IN. See, auditor should read the internal audit report. Auditor should read the invoices raised by professional, that is lawyers. Auditor should read the investment register or shareholder register. See, investment register, when the auditor reads, he will realize where all my client has put the money. When the auditor reads shareholder register, he will understand who all has invested money in my client. Next, look at the insurance of key management. Look at that policy. Look at the information your client has supplied to regulatory authorities. Look at the income tax return that your client has look at the income tax return that your client has filed. By the way, this regulatory authorities guy, this is the example. Okay. Okay, and last point is interest, that is statement of conflict of interest. Okay, check the statement of conflict of interest. Got it? Okay. So therefore, all these documents the auditor can read in order to get an understanding of all the related party relationships and transactions. So 5 answers majorly you need to be very clear with when it comes to 550. First thing is that why is 550 introduced in the first place? It is introduced so that auditor can identify whether all related party relationships and transactions that the client has entered into have been disclosed in the financials. Okay. So therefore, if the AFRF is silent, then in that case you can follow the definition given by 550. The management's responsibility is to identify the relationships, identify the transactions, and disclose them. Auditor also needs to be alert because there may be high risk of material misstatement when it comes to related party transactions. Especially in these 3 cases, there will be high risk. Okay. How will the auditor understand RPR, RPT? He has to inquire with the client, he has to inquire with the management, and he has to understand the internal control system, whether it exists or not. And last point, consideration specific in case of small entities, auditor should do these three things: inquiry, observation, inspection. And auditor should read all these documents, okay, to understand the related party relations and transactions. These will give him cues that, okay, there are more transactions, more parties which the client has not disclosed. If you identify more parties, ask the client to disclose. If they disclose, well and good. If they don't disclose, you can modify your opinion. People who are online right now, if you understood SA 550, write in the chat box SA 550 done. People who are online right now, write in the chat box SA 550 done. Perfect. Chalo. Let's go ahead. My iPad's battery is low. That's the reason why it's going on. The screen is getting logged frequently. Okay, guys, let's go and hit the target. We are through with this one as well. 550. Okay, chalo. Let's go to the next one. Let us go to a important standard. Let's go and do SA 260 now. Okay, communication with those charged with governance. Okay, guys, communication with TCWG. I hope the screen is visible to you now. Chalo, look here. Now, what is the scope of the standard and objective of the auditor? Okay, guys, the scope of the standard is, deals with auditor's responsibility to communicate with TCWG in an auditor financial statements. Okay, so therefore it is the auditor's responsibility to communicate some stuff to TCWG, okay, during the audit. That is what all things you should communicate are being told to you by SA 260. Okay, what is the objective of the auditor? The objective is to communicate clearly with TCWG the responsibilities of the auditor and overview of the planned scope and timing of audit, so that they are aware of what is going to be my role in this entire audit process, what is the expected time to complete the audit, and how are we planning to approach the audit. Those are the things that you should communicate with the auditor. That is the first thing. Second, to obtain from TCWG relevant information for the audit, to provide TCWG with timely observations that are significant and relevant to their responsibility to oversee financial reporting process, and to promote effective two-way communication between auditor and the TCWG. So as you can see, it is so clearly mentioned here. That, remember, SA 260 is a two-way communication. That is the most important point which many students miss. Guys, many students feel that communication with TCWG means that it is the auditor who is going to communicate with TCWG. Bas. Yes, that is more important, but remember, we want TCWG also to communicate. It is a two-way communication. Got it? See, we are communicating with them with the under the presumption that they also will share vital information about the audit with us. Got it? So the objectives are very clear. The objectives are in four folds. Okay, pay attention. Learn along with me. Point number one, to communicate with TCWG two things. First, my responsibility and my planned timing and expected planned scope and timing of audit. Point number one, once again, repeat after me. To communicate with TCWG, my responsibilities, auditor responsibilities, and planned scope and timing of work. Okay. Point number two, I am communicating. My other objective is to obtain also from TCWG information that is required for my audit. Point number three, to provide TCWG with timely updates, right? Because see, the TCWG is responsible, for example, the CFO. CFO is responsible to oversee the financial reporting. So therefore, whatever I come across, let's suppose I came across a significant difficulty, or I come across a significant misstatement which needs to be rectified, I will inform the TCWG well in advance. I will tell them right there and then. I will not wait till my audit ends and then I will tell them. So I have to communicate with TCWG on a timely basis. Matters that are very, very significant and relevant to their responsibility to oversee financial reporting process. Let's suppose, example, I identified a fraud. It is not my duty, but during the course of audit, I identified some fraud is happening, right? So therefore, as you are aware of, according to 143.12, within 2 days of knowledge, you have to inform the board of directors or audit committee. Who are they? They are TCWG. So within 2 days of knowledge, you have to inform the audit committee or board of directors, right? So what is that? It means that you are informing the TCWG on a timely basis. And last point is to promote effective two-way communication. So very simple. You can learn the objectives along with me. Okay. Point number one, to communicate clearly with the TCWG my responsibility and my planned scope and timing of audit. Point number two, to gather information from TCWG which is relevant for audit. Point number three, to communicate with TCWG on a timely basis any significant aspect of audit which require their attention, which is relevant for them for financial reporting process. And point number four is to promote effective two-way communication. See, I am able to learn it right now in 2 minutes. Then in that case, if you know the concept very well, you will be able to learn it at least in 3-4 minutes. The entire concept will be in your mind. Okay, next point. Now, let's look at some definitions that who exactly, guys, is a TCWG. Okay, who is TCWG? It is the person or organizations with responsibility to oversee the strategic direction of the entity. Example, chief executive officers, and obligations related to their accountability of the entity. Okay, the many organizations, you won't believe, have a chief governance officer, chief operating officer, chief executive officer, okay, chief financial officer, the board of directors. All of these people are responsible for strategic direction of the entity. And they are the ones who are accountable, means anything goes wrong, they will be caught. This includes overseeing financial reporting process. So any person in the organization, guys, any person who has these responsibilities will be termed as TCWG. For example, for my business, my teaching business, I am responsible for everything. I am responsible to ensure that the GST returns are filed properly. I am responsible to ensure that the balance sheet is prepared properly. I am responsible for my business, so I am the TCWG of my business. Got it? Who is the management? The persons with executive responsibility for the conduct of entities' operations. For some entities, management includes some or all TCWG. For example, executive members of governance board or owner manager. So remember, management means what? The ones who are responsible for day-to-day operations. They will be responsible. They will be termed as management. And in many cases, management TCWG may be same. Or in the case of small organizations, the owner manager, he himself is a TCWG as well as the manager. Okay, chalo, very good. Now the most important point, what matters are to be communicated. Okay, if any question has a chance of coming in the exam, it is this question. Okay, pay attention very carefully. Ha guys, first, as we discussed in the objectives, the auditor is supposed to communicate responsibilities of the auditor, right? The first thing that I will communicate is my responsibility. Second thing, also coming from objectives, planned scope and timing of audit, including significant risk identified by the auditor. So this also I will communicate with TCWG. I'm repeating once again, my responsibility, planned scope and timing of audit, including significant risk identified. Third point, auditor's view about significant qualitative aspects of entities' accounting practices. Sir, what do you mean by significant qualitative aspects of entity account practices? Guys, this is something that we see in SA 700. Okay, in SA 700, if you remember, the qualitative aspect of accounting policy of an entity is the lack of neutrality, wherein what the client is doing. Let's suppose I am doing the audit, I identified some misstatement, I told the client to rectify, but you know what, the client is rectifying only those misstatements that is increasing their revenue, increasing their profit. They are not rectifying those misstatements that decrease the profit, that increase the expense. They are not rectifying. In short, the client is rectifying those misstatements that are beneficial for them, and they are not rectifying those that are not beneficial. That is called as that is one of the qualitative aspect of the accounting. So I should inform this to the TCWG. I hope the logic is clear. I am repeating once again. If you inform the management to rectify some errors, if they are rectifying only those errors that are beneficial for them, the ones that increase profits, okay, then in that case, it is called as a qualitative aspect of the accounting, which the TCWG should know. Significant difficulties encountered during audit if the management is putting limitation on your scope. Okay, they are saying that no sir, we can't give you these details and all. Go and inform TCWG. Written representations the auditor is requesting. Okay, so TCWG we should communicate with TCWG what written representations I am requesting. Circumstances that affect the form and content of the auditor's report. Circumstances that affect the form and content of the auditor's report means the situations which are leading to modification of your opinion. Okay, if you believe that there is a chance that you have to modify the opinion, then you have to inform the TCWG about it, that because of these things I am going to modify my opinion. Any other significant matter arising during the audit relevant to the oversight, any other. This point number 7 is a sundry category. Okay, just 1 second guys. Guys, just 1 second. Okay, sorry. Chalo. Ha guys. So point number 7 was the sundry category. Okay. Chalo. So what are the matters that you need to communicate? Your responsibility, your planned scope and timing of audit, then significant risks, significant qualitative aspects, significant difficulties, written representations, circumstances that affect the form and content of the report. Okay, I hope the logic is clear to all of you. Matters to be covered. Now remember, there is one additional matter that you need to communicate. That is, you have to communicate about your independence. But remember, it is only to be communicated in the case of listed entities. So in the exam, if they ask you matters to be communicated and they are saying that the client is a listed entity, then you have to write all these 7 points plus this will be the 8th point that you will add. Got it? Now, what is the matter to be communicated? You have to give a statement that the engagement team, you have to give a statement that the engagement team and others in the firm, including network firms, also have complied with relevant ethical requirements. You know the relevant ethical requirements: integrity, objectivity, professional competence and due care, confidentiality, professional behavior, and the related safeguards that have been applied to eliminate identified threats to independence or reduce them to an acceptable level. Okay, so you need to communicate to the TCWG of the listed entity that your CA firm and the engagement team has all of them have complied with the relevant ethical requirements. What are the ethical requirements? I just told you: integrity, next is going to be objectivity, next is professional competence and due care, next is confidentiality, and last is professional behavior. And along with that, you have also been complying with independence. Okay, the related safeguards that have been applied to eliminate identified threats. If you have, no, I have not yet taught you essay, I have not yet taught you the ethics part. Okay, in the ethics part, guys, we study what are the threats, what are the threats to independence, and what are the safeguards. Okay, so therefore all the required safeguards have been applied to eliminate the identified threats. For example, if at all one of my team member had purchased shares of the client, then in that case he has sold them and we no longer hold any shares. So that selling of the shares before accepting the appointment is called as a safeguard that has been applied to ensure that my team is independent. Got it? Okay. And the last point, guys, is what should be the communication process. Okay, focus very carefully. What should be the communication process? The auditor shall communicate with TCWG the form, timing, and expected general content of communication. In writing, significant findings from the audit and regarding auditor independence on a timely basis. So remember, auditor needs to ensure that he is communicating with TCWG the form, he is communicating the timing and expected, yes, timing, expected general content of communications. In writing, he should also communicate the significant findings on a timely basis. The auditor shall evaluate the adequacy of communication with TCWG. If not found adequate, auditor shall evaluate the effect and take appropriate action. The audit should include the matters communicated to TCWG in the audit documentation also, whether you communicate orally or in writing. Always ensure that you add whatever you have communicated with TCWG in your documentation, because in future, if anybody is going to raise a doubt, on the kind of quality of work you performed, remember it is going to be audit documentation that will come to your rescue. So always, whenever you communicate anything with the TCWG, whether in writing or orally, ensure that you make a note of it in your audit documentation. Got it? So the communication process is very straightforward. Ensure that you communicate on time. You ensure that you communicate in writing, and you ensure you communicate all the significant points to TCWG. Got it? Perfect. All the people who are online right now, if you have understood essay 260, write in the chat box essay 260 done. It was a very, very simple standard. I told you these standards now will not take more than 20 minutes per standard, right? We saw the objective and scope. I made you learn the objective. I made you learn the entire objective. It was 4 points. After that, we saw the definition of TCWG and management. After that, guys, we saw what are the matters that one should communicate. We also saw that in case of listed entity, what is the additional point to be communicated, and we saw what should be the communication process. Got it? If you understood 260, write in the chat box 260 done. Okay, guys, but literally, it's hats off to Pankaj, Amna. Okay, seriously, this is a shout out to both of you guys. Okay, Pankaj, Amna. Okay, I know I have been a student of this audit subject, and I know it is so difficult to sit at one place, and I know all of these concepts which are there, these are heavy concepts. In fact, the standards that we did today, 510, 520, 530, okay, 550, all of these 610, all of these are such heavy content. Okay, heavy content means it is something which will definitely tax your brain. Okay, but you guys have been sitting since the start, and I think so, Amna, you to sat yesterday as well, right? The yesterday you sat the entire 4 hours. Okay, today you are sitting. We are almost 5 hours into the session. Okay, but the point is that ki genuinely the dedication that you guys are showing, it is enormous. Okay, I am 100% sure that this dedication will definitely help you guys to clear. And not only the reason I'm taking your names is because you guys are replying. Other students, I'm sure there are many students who are behind, who have just started watching the session, or there will be students who will watch this session recorded as well. Okay, if you're watching this session recorded, please comment on this session so that I can come to know that who's watching. Okay, and then I can give a shout out to you. But the point is that the dedication that you guys are showing, because sitting at one place grasping all these heavy concepts together, okay, in a marathon session, that's the reason I'm trying my best to go as slow as possible, okay, so that you are able to understand. Got it? Thank you, Pankaj beta. Thank you, Pankaj. What I can advise you is that see, if you want to genuinely score marks in audit, okay, then in that case, you should ensure that first you are taking a proper class, okay, whosoever class you take, okay, but ensure that you get a proper class where the MCQs are getting solved, where the writing practice is happening, where homework is getting checked, where tests are being conducted. Ensure that you join a class which is giving a holistic approach. Okay, see, completing portion is one thing, but there are multiple things that are required in this subject to ensure that you get the passing or you get an exemption. Understood? So therefore, please ensure that whatever techniques that I'm telling you, implement them. I'm sure you'll get good marks. Okay, beta. Got it? Okay, okay. Your attempt is Jan 25. No problem, beta. And on the Adda 247 app, there is an exam oriented batch also. That is a recorded batch. If you want, you can join that exam oriented batch. Okay, Pankaj. That exam oriented batch is already done. You can, I think so. There's only one lecture left in that. Apart from that, that is done. That is a much more detailed than these sessions. Okay. In case you want additional understanding. Chalo, all the best. Okay. Chalo, guys, let's go ahead. Done. Let's go and tick mark our targets. But you are realizing what I want to teach you guys. One more important thing which I want to teach you guys, that if you prepare a plan, if you're making a plan, and then can you see the happiness that you get when you tick off something, right, which is done, right? The happiness that you get when you are tick marking something that is completed. So this is also one additional thing which I want to teach you guys, is that now imagine if you were doing things randomly, okay, doing things randomly without a list. Okay, it would have been so difficult. Every time we would be wasting time to identify which standards are done, which are not done. Okay, so better always ensure that you have a to-do list in front of you, and the moment you do it, go and tick mark, tick it off that this is done. Got it? Chalo guys, let's go and see. Let's start with a simple one now. Let us go and close essay 299, that is joint audit. Okay. Okay. What do you mean by joint audit? Joint audit simply means no beta, I highly doubt reading the module will help. Take care. What you can do is that reading the module will not help beta. Okay. What you can do is that this book which is there is available on the Adda website. Okay, go and buy this book. It will, I don't know, I think so it will cost some 300 400 bucks. Okay, but this book which is there, this book basically covers up everything in a proper flow. It is in a proper fashion. Okay, and this covers the entire study mat, and plus it's in a question answer format. Understood? So when you read this from here, once you are seeing my videos, and when you read the stuff from here, then it's in a question answer format, so that you exactly know that if this question comes, how much answer is to be written. Got it? Plus in future, when I'm taking any detailed any other session, the one shot revision that I'm taking, I'm doing it from here. So therefore, Pankaj, your one shot revision session which are there, if you watch them and see this book, then it will be done. Got it? So I believe that this I believe that because see, the module has a lot of stuff and 30 days is not enough to cover that. Okay, this is the concise version of that book. Okay. Okay. Essay 219 talks about minimum 2 auditors. Okay, remember, it's a very simple standard, by the way. Okay, no, not taxing your brain at all. If the client feels that it is not possible for one auditor to audit them, or or if the auditor themselves feel that the client size is enormous and it is not possible for one single auditor to do the audit, then in that case they can recommend appointing one more auditor. Okay, so it can be anything. It can be a sole proprietor plus a sole proprietor. It can be sole proprietor with a firm. It can be a firm with another firm. Got it? It can be any permutation combination that you can see. Okay, one sole proprietor with other also is a joint audit. One sole proprietor with a CA firm is joint audit. Okay, and one CA firm with other CA firm is also joint audit. Got it, guys? Okay, next point. Focus on this concept very carefully. Now we are looking at the scope of this standard. Scope. Okay, what is the scope, guys? Essay 299 deals with special considerations in carrying out audit by joint auditors. The standard lays down the principles for effective conduct of joint audit to achieve the overall objectives. Okay, the standard is actually telling you what? How do you conduct joint audit so that you are able to achieve the overall objectives of Essay 200. What is the objective? To lay down broad principles for joint audit, to provide a uniform approach for joint audit, to identify distinct areas for work and coverage, to identify individual responsibility and joint responsibility. These are the questions that we are going to see. The meaning of joint audit I already taught you. Joint audit is an audit of financials by two or more auditors appointed with the objective of issuing the audit report. Such auditors are jointly called as joint auditors. Got it? I hope it's now visible. What is the meaning of joint audit? Joint audit is an audit of financials by an entity or by two or more auditors. Right? That's the reason I use the term minimum two with the objective of issuing the audit report. Okay. Now, the first and the most important answer of this, there are only three answers in Essay 299. Only three. Okay. Answer number one is the responsibility and coordination among joint auditors. That is the responsibility division. What will we call this as? Responsibility division. Okay. Point number two is how do you plan? How do you plan the joint audit planning? And point number three is reporting. Okay, point number three is reporting. So there are three main questions in this standard. One is responsibility division, second is audit planning, and third is reporting. Got it? Now, let's take one answer at a time. Look at here. When it comes to responsibility division, very simple. The work which the auditors are going to do, joint auditors, that work will be split between both of them. Okay, for example, there are two auditors, EY and KPMG. EY is going to do assets and income. KPMG is going to do liability and expenses. So therefore, the work is split between them. There is a work allocation document that is prepared, which will clearly specify this is the work of EY, this is the responsibility of KPMG. Got it? And then what happens? Sorry. Okay. And then what happens? Both of them are responsible for the work that is allocated to them. They're responsible for the individual area. See, individual responsibility in respect of work divided, each joint auditor shall be responsible for only for the work allocated to such joint auditor, including proper execution of audit procedures. So I'm repeating once again, the work that is given to you, you are responsible for that. Okay, but there is going to be some amount of work which will not be divided, for which there is going to be joint and several responsibility, means both the auditors will be responsible for these areas. Got it? Now remember, there are 6 points. Remember, there are 6 points. Okay, and this answer is very, very easy. There are 6 points that you need to remember. Point number one, work that is not divided among joint auditors means common area. Both the auditors are responsible for common areas, correct? The work that is not divided amongst both of them, both auditors are responsible for it, correct? Point number two, decisions taken by joint auditors about the common area, both are responsible. Point number three, matter which is brought to the notice by one auditor to other and there is an agreement between the two. What did I say? Matter that is brought to the notice. I think so after around 10 minutes we'll have to take a 5 minutes break so that my iPad can charge. Okay. हाँ बच्चों, what did I say? Focus very carefully. I told you that matters that are brought to the notice by one auditor to other auditor and there is agreement between the two, both auditors are responsible for that. So three things, once again, repeat after me. Point number one, common areas, both are responsible. Decisions taken by joint auditors on common area, both are responsible. Point number three, matters which are brought to the notice by one auditor to other, and both of them are agreeing to something. Okay, then in that case guys, both are responsible for that. Point number four, to check if financials comply with the applicable statute. If the financials are complying with the applicable statute, both are responsible. To check if the financials are complying with the applicable the presentation disclosure as per AFRF, both are responsible. And to check if the audit report is prepared as per standard, both are responsible. I hope the 6 points are clear to you. Let me mark the 6 points now. Point number one, guys, audit work that is not divided. See, audit work that is not divided and carried out by all basically means what? The common area. Point number two, decisions taken by all joint auditors in respect of common areas. Matters brought to the notice of joint auditor by any one of them and on which all of them agree. One auditor told something to the other and both of them agreed. To check if financials comply with the statute. To check the presentation and disclosure complies with AFRF, and to ensure that to ensuring compliance that the audit report complies with the applicable standard. So both are responsible. I hope the answer is crystal clear to you. There are 6 points and the 6 points are ultra easy. Okay. Next point. Now let's go to the next important answer, audit planning. Okay. Focus. Remember, we are discussing about okay, so special considerations while planning joint audit. Point number one, both joint auditors will be equally responsible for undertaking the planning. Okay. So engagement partner and key members of both the joint auditors will be involved in planning. Point number two, they will together prepare a joint strategy. Point number three, they will together prepare a joint plan. Okay. Point number four, one auditor, if he identifies any risk of material misstatement in the area allotted to other auditor, he will inform him, and vice versa. Risk of material misstatement is to be assessed by each auditor and shall be communicated to other auditors, whether pertaining to overall financial statement level or area of allocation among other auditors. Whenever you identify any risk of material misstatement at the overall level or individual level, you'll communicate with the other auditor. Next, what all procedures you're going to be performing, you should communicate with each other. Shall discuss and document the NTE of audit procedures, and the same shall be communicated to TCWG. Okay. The joint auditor shall obtain common engagement letter and common management representation letter. Okay, engagement letter we are going to just now see after some time in SA 210. Management representative letter we see in SA 580. Okay. And last, work allocation document should be signed so that in future there is no fights over the fact that this work was allocated to you, that work was allocated. Clearly, let's sign a work allocation document and clear out there. Okay, and you have to communicate it to the TCWG that who's going to be performing which work. And last point, when the joint auditor expect to modify the opinion or include paragraph, they should communicate with TCWG regarding the circumstances that led to the this point is a common point everywhere. Okay, whenever you are going to modify opinion or add a paragraph or paragraph, you should communicate the reasons with the TCWG. Okay, so very simple point in planning. Point number 1, both of them will be involved in joint planning. Point number 2, both of them will be involved in preparing the strategy. Both of them will be involved in making the plan. The risk of material will be communicated by one auditor to the other auditor. Both of them will have to ensure that they document the NT audit process and inform TCWG. The joint auditors, they should obtain there will be one engagement letter, joint engagement letter, joint management representation letter. Okay, these are two different documents. We'll see them when we do these standards. Okay, and last point, there should be one work allocation document which clearly specifies the division of work, and that document also should be informed to TCWG. Got it? Okay, and the last point is the most simple answer. What is the reporting requirement? What is the reporting requirement for the auditor? Okay. हाँ बच्चों, what is the reporting requirement for the auditor? Okay. Now see, very simple. Joint auditors will issue a single audit report, but they will issue single audit report when in the case of there is no difference of opinion. If there is a difference of opinion between the auditors, then no need to go by majority. You can issue separate audit reports, but ensure that you are giving reference of the other report in your report in the other matter paragraph. Okay, we have already seen this when we did SS 706 yesterday. Joint auditors are required to issue a common audit report. In case of disagreement, they shall express their opinion in separate report. The joint auditor is not bound by majority. The audit report issued by the joint auditor should refer to separate reports. Such reference needs to be made in other matter paragraph. Each joint auditor is entitled to assume that other auditor carried out his work as per standards. There is no need to review the other auditor's work. Other auditors have informed them about any departure from AFRF. Before finalizing the audit report, auditors shall discuss and communicate with each other their conclusions. That will form basis of the report. Okay. So remember that you should communicate with the other auditor also. How have you reached your opinion? So very simple point, guys. Joint auditors are required to issue a common report, but in this case, if at all you believe that your opinion is not matching the other auditors, then no need to go by majority. You can give a separate report, but ensure you give, everybody has to give reference of each other's report in the other matter paragraph. Finish. Okay, perfect. We just completed with SA 299 also, guys. It was a very simple standard. Okay, we saw the scope, we saw the objective, we saw what is the responsibility division, we saw special consideration while planning, and we saw the reporting. People who are online right now, if you understood 299, write in the chat box SA 299 done. I told you these standards that we are doing now are very small standards. Okay, perfect. Chalo, very good. Now we are left with what, guys? Now we are left with essay 200 and hi Narayan Hari. Hi beta. Okay. Now guys, we are left with essay 210 and essay 230. That is essay 210 is our target for today and essay 230 is the target for today. Okay. Essay 210 discusses about what? Essay 210 discusses about your engagement letter and 230 talks about audit documentation. Correct? Okay. Let us start with essay 230 now. Actually, let us start with essay 210. That's a small one. I just wanted a feedback from all the people who are online right now. Okay, is there any changes required on in these charts, or are you liking them? Do you think so? Studying from them will be fun. Do you think so? It is going to make your audit journey easier. Please let me know what is your view. Okay, perfect, perfect. I am liking, sir. Charge your iPad. Yeah, yeah. It is the battery is 2%. I thought that I'll complete. Can we take a break now first? Okay, let's take a. How much is it? It is 9:48 right now. Can we rejoin at 10 p.m. because it will take 10-15 minutes at least to charge. Okay, but I hope you guys are enjoying these charts. I mean, it takes a lot of efforts to make them. Okay, I'm trying my best that uh, I'm trying my best that you're able to. Oh, thank you, Narayan. Thank you, Narayan. Okay, I'll just charge the iPad, guys. It will take me 10 minutes to charge the iPad. Okay, thank you, Amna. Hello. Okay. So we are at 17% of charge that I should be fine to cover two standards. Nayan has a question, sir. How could you remember the audit in your mind for a long term? Beta, you are asking me, ki you are asking that how should I remember? Narayan, beta. A very simple technique is that it is what is out of sight is out of mind, Narayan. If you want to remember any particular subject for a long period of time, you have to ensure that you keep studying it every day. Okay, ensure that at least for 2 hours in a day you are focusing on audit. Okay. Okay, let's go ahead. Now, let us cover SA 210, guys. Okay. SA 210 discusses about what? SA 210 discussing about the agreeing to the terms of audit engagement. Okay. Now, remember agreeing to the terms of audit engagement. In this, what is the first point? We are going to be discussing everything about the audit engagement letter, correct? So the first thing that we need to know is the objectives of the auditor. The objective is very simple. The auditor should accept or continue an engagement only when the basis upon which it is to be performed is agreed. Okay, so whenever, in short, there should be consensus addendum. Whenever you are starting off any work, the basics, the fundamentals of that particular work should be agreed with the client. Okay, you should agree that through what? Through establishing if the preconditions are present and confirming that there is a common understanding between the auditor and the management. Got it? So remember very carefully, the objective of the auditor is to accept or accept the engagement if the client is coming to you for the first time, or to continue an engagement if the client is already with you and he wants to renew the engagement. So therefore, to accept the engagement or continue the engagement when the basis upon which it is to be performed is agreed with the client. And how do you agree that? You agree that through establishing if the preconditions are present, and you agree that by confirming that there is a common understanding, consensus addendum between the auditor and the client. Got it? Client, of course, meaning management, and where appropriate, TCWG. Now, a very important question from the exam perspective is, what are these preconditions of audit? Okay, the first precondition, guys, is that the AFRF should be acceptable. Mind you, if these preconditions are not there, then you should not accept the audit. Okay, remember, we are right now in the basic stage of the audit, wherein what is happening is that the client has come to you, the client has just knocked your door, the client is sitting in front of you, and when the client is sitting in front of you, the client is discussing his problems, the client is telling you everything, and is requesting you that please do the audit. Now it is at this juncture that you have to ensure that as an auditor you make sure that the preconditions are present. Okay, it is at this juncture, guys, wherein you have to ensure that the preconditions are present. What are the preconditions? First, you should ensure that the applicable financial reporting framework is acceptable. For example, if your client is a bank, then they have to follow the Banking Regulation Act, of course. So you have to ensure that is the client actually following Banking Regulation Act or not. Okay. Point number two, obtain agreement of the management that they understand their responsibility. So get an agreement from the management, the client who's sitting right against the table, across the table, get an agreement from him that he understands his responsibility. Okay, what are his responsibilities, guys? There are multiple responsibilities. Responsibility number one, the client will be responsible for preparation and presentation of financial statements, not you. Okay, the client is going to be the one who's responsible for preparation and presentation of financial statements, that too in accordance with AFRF. Okay, it is the client's responsibility. Point number two, designing, implementing, and maintaining an adequate internal control system. I'll repeat once again. designing, implementing and maintaining DIM. You remember our point, DIM of ICS. Okay, designing, implementing, maintaining an adequate internal control system to prevent and detect frauds and errors. And last point, to provide the auditor with all information, access to additional information, and unrestricted access to people within the entity. So to provide the auditor with all information, additional information, and unrestricted access to people within the entity. Okay, so using this, you'll be using this chart, you can easily learn the answer. I'm repeating the whole answer to you once again. The client has just knocked your door. The client is sitting right across the table. The client is explaining you his problem. He wants you to audit his company's financial statements. As a step one, you need to identify if the preconditions exist. How will you identify that? First, check if the AFRF is acceptable. Suppose Amna is saying, sir, where can I find the MCQs on Google that you spoke about in the last lecture? Beta, which MCQs are you talking about? Are you talking about the ICA website? Then I'll show you. Okay. Guys, I'm saying that the AFRF should be acceptable. Okay, applicable financial. So first thing you should check is AFRF acceptable or not. Point number two, obtain agreement of management that they understand their responsibility with respect to three things. That is preparation and presentation of financial statements in accordance with applicable financial reporting framework. That is their responsibility. Point number two, designing, implementing and maintaining an adequate internal control system to prevent and detect fraud and error. It is their responsibility. After that, guys, to provide the auditor with all information, additional information, and unrestricted access to people within the entity. Got it? Acha, Google form. Amna beta, that is going to happen tomorrow, 25th. Okay. Tomorrow, I will come on YouTube live. I am going to come on YouTube live, and it will probably be somewhere at 8:15 or 8:30. Okay. Beta. Okay. So I have scheduled a test. Okay. I have scheduled a test for all for chapter number 1. Okay. That is the nature, objective, and scope. Got it? What I've done is that that test which is getting scheduled, what you need to do is simply join tomorrow probably at 8:30 p.m. 8:30 we will join, and after that, once we finish our targets, okay, once we join at 8:30, that test will be live. I will share a Google Drive link, okay, on the chat. Once you click on that, you will find the question paper, and in that question paper, there will be a Google form as well as one question which you have to write and send the PDF on the Telegram group. Got it? Understood, beta? Chalo. Chalo. Next point. Okay, guys. Next point is the content of the engagement letter. Okay. What is the meaning of engagement letter? Engagement letter simply means that I've written here referred dictionary, but what is the meaning of engagement letter? This dictionary is our audit dictionary that we make in class. Okay, not the main dictionary. It simply means a contract between the client and the auditor, right? I'll just change that. Okay. What is the content of the engagement letter? This question came in September 24. Okay. What is the content of the engagement letter, guys? The content is that first you should mention the objective and scope of audit, which we study in SA 200. What is the objective audit? Is to obtain reasonable assurance about whether the financial statements are free from material misstatement, and to report whether the financials are showing a true and fair view, correct, and to report in accordance with the standards. Then you will write the responsibilities of the auditor. Our responsibility, what are our responsibilities, guys? Our responsibility is to ensure that we are following the auditing standards, we will remain independent, we will basically ensure that we obtain sufficient audit events. All your responsibilities. Management responsibilities we just discussed 2 minutes before in the preconditions to audit, right? They will prepare the financials, they will ensure that they maintain an DIM of ICS, correct. Third point is that they will provide the auditor with all information, additional information, and access to unrestricted access. Identify the AFRF, that is the framework under which the financial will be prepared. And last, you have to provide a reference to the expected form and content of any reports that will be issued. Okay, for example, the CARO report that you have to issue, they will give a reference that in the case my client is a company, and if CARO applies on the company, you have to give them a reference that CARO also will be issued, CARO report also will be issued. But along with that, you should write a statement that there may be circumstances in which the actual report may differ from the expected format. Okay, because in all probability, maybe by the time you finish the audit, the CARO report has changed. So therefore, the statement that there may be circumstances in which the actual report may differ from the expected form and content. Got it? Okay, people who are online right now, if you understood the content of the EL, write in the chat box content of EL done. Write in the chat box content of engagement letter done. Okay. Next point. Now there are only two things left in the standard. This is one question and this is the other question. Okay. Once we clear that, essay 210 is done. Now, pay very careful attention. Look at the scenario that I'm trying to cover. Okay. Auditor has entered into a single engagement letter for multiple years. Okay. What has happened? Auditor has entered, let's suppose, one engagement letter, and in that you're covering 3 years. Okay. Auditor has entered into one engagement letter for 3 years. Okay. Now the auditor wants to, now guys, the auditor wants to revise the engagement letter. Okay. So we are studying the circumstances when he should send a revised engagement letter. See, there is one engagement letter already in place for 3 years. Okay. Now the first year audit is done. Second year, you are ideally not required to send an engagement letter, correct? But what are the circumstances when a revised EL is required? Okay. So I've given the HTR for you. MNORST. What is the word? MNORST. M stands for misunderstanding. If guys, there's a misunderstanding between the client with the client with respect to scope of audit, better send a revised EL. Okay. If there is a change, N stands for nature. If there's a change in the nature and size of client business, I've given the example also. If the client was earlier a trading entity, now it's a manufacturing entity. So thus the nature of business has changed. Okay, the size of the entity has changed now. Earlier it was a small trading firm, now it's a manufacturing entity. So better send a revised DL. O stands for ownership. Okay, earlier you remember Aakash Institute was there, change in ownership. Let's suppose the earlier the TCWG of Aakash Institute was different. Now when Byju's purchased Aakash Institute, the TCWG will change. So if there's a change in ownership, you should send a revised engagement letter. Okay, because your earlier engagement letter was signed by the TCWG of Aakash Institute. But now when Byju's controls Aakash Institute, now you have to send a revised EL so that the Byju's TCWG are also are aware about you as an auditor. If there's a change in senior management, because the earlier senior management signed your EL. Now there's a new guy, send the revised EL. PQ, MNO, RST. R stands for regulatory environment. If your client was earlier an unlisted entity, now it is a listed entity, send the revised DL. S stands for senior management, I told you. And O stands for other reporting requirement also. So MNO. O, remember, is coming 2 times, ownership and other reporting requirements. And let's suppose your engagement letter you wrote that we are going to provide CARO 2016, but now the reporting requirement is changed. It is CARO 2020. So send the revised DL. And last, change in terms, right? That is, let's suppose fees is changing, then you should send a revised DL. So very simple. MNO, RST. M for misunderstanding, N for nature and size of business, O for ownership ownership is changing, other reporting requirements are changing, R for regulatory environment is changing, S for senior management is changing, and T for terms are changing. In these cases, guys, you should ideally do what? You should ideally send a revised engagement letter. I hope the logic is clear to you. चलो आगे बढ़ते हैं. Last point of the standard. Okay, guys, last point of the standard. Now, chalo. Now, the last scenario of SA 210. What are we seeing here? Change in the terms of engagement during audit. What did you see here, guys? Change in the terms of engagement during audit. Okay, what does this mean? The client signed an engagement letter with respect to audit. As an auditor, see, I've given the timeline also. Engagement letter is signed for audit, correct? So auditor will start his audit work very clearly. Look at the timeline, be very careful. The engagement letter is signed for audit. Auditor started his audit work. Point number 2, when the auditor started his audit work, he realized that there is a high risk of material misstatement, and therefore he started probing into a lot of things. He started asking a lot of questions. Okay, he was trying to show professional skepticism, which is a good thing, correct? Now the client is worried that the auditor will be able to detect the fraud. The client is worried that the auditor might be able to detect the fraud in the financials. Okay, the earlier the client thought that the auditor will come, he will audit and he will leave. But you, when you reached there to audit, you were trying to ask some very strict questions. Okay, and because of that, now the client believes that you will decipher that fraud, and because of that, the client will go down. Therefore, now what are the various options that the client has? The client can threaten to remove you, but that is not possible. You know very well, if a client has to remove the auditor, they have to take central government approval. So it is very difficult for the client to remove you, right? To basically throw you out of the position. Therefore, now the client tries some different approach. You know what the client does? The client now is requesting the auditor during audit, the audit is ongoing, during audit, that please stop audit, don't continue audit, you just do a simple review or a related service and you leave. Either he will give you some review work or he will give you some non-assurance work, that related service work, like agreed upon procedure, and he ask you to leave. He'll say that I'm sorry, I misunderstood what audit is, I don't know. Okay, I'm sorry, but what I want you to do is just do a review and then leave. Why is the client requesting you to do a review and or a related service? Because see now, you very well know that audit is a reasonable assurance engagement. The audit report is a public document, goes to everybody, whereas review, it is a limited assurance engagement and the report is very private. It is not a public report. And also, guys, related service mein there is no assurance at all. So there is not going to be much damage that the chartered accountant can do when he is doing a review or related service. So that is why he wants you to stop audit and do a review. Got it? Now in this case, what should the auditor do? But before we go ahead, I want a confirmation from the people who are online right now. Have you understood this case? If you understood this case, then write in the chat box, case understood. If you understood this case, write in the chat box, case understood. Because unless you understand the case, there is no logic to understand the solution. Perfect. Okay, now the next point. Next point, guys. Now, the auditor should inquire. Now, when the client comes to you with this request, what you should do? You should simply inquire with the client the reason for this absurd request, right? Because it's an absurd request. Stop audit and do something else. Okay, so ask the client for the reason. If it's a if at all the client gave you any valid reason, okay, then only accept the request. Okay, and you can now enter into the new engagement letter, because now you are going to do a completely new service. So you enter into a new engagement letter, example review. So enter into an engagement letter for review. Okay, plus the new report should not refer to any old audit procedures. Okay, in the new report, do not write anything about the past, that you are engaged to do audit, you did those procedures under audit, and now you're using those procedures. No need to give reference to any past. Okay, however, this is more important. In many cases, this will be the situation where the client does not have any valid reason. Okay, then you straight away reject the request and you continue with the audit. But guys, if at all the client, in order for you to continue with the audit, the client has to cooperate with you. But if the client is not cooperating with you, then in that case you resign from the engagement, you withdraw from the engagement, and you inform the appropriate authorities the reasons for your withdrawal. Got it? If you're resigning, then of course in the case of company you'll have to file Form ED3. Got it? So it's very easy. If the client comes to you with this absurd request, ask for reason. If the reason is valid, accept the request, enter into new engagement letter. The new report that you will give will not include a reference to the old procedures. If at all it is an invalid reason, then don't accept the request. You continue with the audit. If the client is cooperating, well and good, continue with audit. If the client is not cooperating, you withdraw from the engagement and inform the authorities. Done. With that, we are through with SA 210 also. Okay, I'll just give you a quick recap of SA 210. Agreeing to the terms of audit engagement, we first saw what exactly is the objective auditor. निरंजन कंतरा सर एक बार वापस बता दो, कौन सा पॉइंट बताओ बेटा, एक बार बताओगे मुझे निरंजन, which point do you want me to cover again? I am recapping the whole thing. Listen. Okay, point number 1, look at the objectives of the auditor. The objective of the auditor is what? To accept or continue an engagement only when the basis upon which it is performed is agreed with the client. Correct? And that you need to check through ensuring that the preconditions are present and there is consensus addendum. Okay, what are the preconditions? Very important. The AFRF should be acceptable. Point number 2, obtain an agreement of the management that they understand their responsibilities for 3 things. Preparation and presentation of financial is their responsibility. DIM of ICS is their responsibility, and they will provide the auditor with all info, additional info, and restricted access. Okay. Next point, the content of EL. This is very simple. Already asked in the exam. When you should send a revised engagement letter? MNORST. Misunderstanding, nature and size of business changes, ownership changes, other reporting requirements changes, regulatory environment changes, your senior management changes, terms change. And last point, if during the course of audit, pay attention Niranjan, if you started off with audit but now you believe that there is high risk of material misstatement, you are about to find fraud, and the client also knows that you might be able to find the fraud, therefore the client now is requesting you that you don't continue with audit, instead do review. When the client will come up with this absurd request, you are going to simply ask the client for the reason. If they give you a valid reason, then accept the request, enter into the new engagement letter, because now you're going to be doing review. Okay, and after that your new report that you give should not include reference to any old procedures. And last point, if at all the client does not have any valid reason, reject the request. You keep continuing with your audit. But if the client does not cooperate, you withdraw and you inform the appropriate authorities. Got it, guys? Done. If you understood essay 210, write in the chat box, guys. Essay 210 done. Chalo. So that we can go to the last one, that is essay 230, audit documentation. Such a cute chart that I've prepared for essay 230. I can't believe it is made by me. Okay. Perfect. Chalo, let's go and tick mark. Okay. I know, I know. Yes, beta. But I am only worried with the aspect that tomorrow, as you can see, our target is even bigger. Tomorrow we have a long target. Okay. Our tomorrow's target is also very big. ठीक है. चलो. Okay. Let's go. We are off to understand essay 230 now. ठीक है. Essay 230 talks about audit documentation. Okay, बच्चों. Hi Rinki beta. Good evening. Okay, बच्चों. Now, in order to learn this definition, okay, actually you don't need to by heart this definition. Sir, why? Because if you're aware of, when I have taught you this master chart, okay, the definition is hidden. Definition is hidden in this master chart, okay. See, audit documentation is, if you're aware of, when we did the master chart, guys, I told you that first the auditor will perform procedures, he will gather evidence, and he will reach conclusions. Correct? I'm repeating once again. First, auditor will perform procedures, he will gather evidence, he will derive conclusions. Right? Same is the definition. Look here. Audit procedures is nothing but record of audit procedures performed, relevant evidence obtained, and conclusions reached. So, in your entire life, never ever you have to remember the definition of audit documentation. Sir, why? Because the definition is right in front of right in the master chart. If the master chart is clear to you, then in that case you don't need to by heart this, right? Audit procedures performed, relevant audit evidence obtained, and conclusions reached. Got it? That is your definition. Point number 2. What is the objective of this standard? Objective of SA 230. Why is audit documentation standard there in the first place? It is there in the first place because it is informing the auditor that auditor, you should prepare documentation that provides sufficient appropriate record of the basis for audit report, and it forms an evidence that audit was planned and performed in accordance with standards. Now pay attention very carefully. You tell me, don't you think so? Whenever, let's suppose, a person gets all India rank 1, you will notice the moment you Google all India rank 1 answer sheet, you will find the answer sheet online. Correct? Now the point to be noted is that that document, that answer sheet, can I say it is a proper record, it is a proper appropriate record of the basis for getting those marks, right? It is not the case that it is what is written is complete bullshit. Okay, what is written is absolutely bang on to the point, and that is the reason why that student has scored such high marks that allows him to get the AR1. Similarly, as an auditor, remember, you need to prepare such documentation which performs the basis of your audit report. In future, anybody is going to ask you, Akash, how did you come up to this opinion? How did you come up with this qualified opinion? How did you come up with this unmodified opinion? Then I need, what will I say? I did my audit properly? No, nobody is going to believe me. What they will believe is the documentation. Okay, the books that the document is the audit file that I show them, because people will look at that documentation and they will be able to understand, oh, it is because of this you reach this opinion. Got it? And next point. Supposing guys, the external parties, NFRA, institute, okay, all of them are trying to understand whether I conducted my audit properly or no. If I have to prove that I conducted my audit properly, if I have to prove, guys, that I conducted my audit properly, in that case, how will I prove? I can prove it only through the documentation. So remember, I should prepare such documentation that it forms the evidence that my audit was properly planned and performed, so that I am not held guilty of professional misconduct. Okay, look here. So that got it. If there's a charge of gross negligence against you, trust me, it is only the documentation, guys, that can save you. Okay. Next, nature of audit documentation. What do you mean by nature, guys? Sorry. हाँ बच्चों, what do you mean by nature? Nature of audit documentation means what? The audit documentation should be such that it provides evidence of basis for conclusion about the achievement of overall objectives and evidence that audit was planned and performed according to the standards. So very similar, both these points, objective as well as nature. ठीक है? Point number 2. Now the purpose. Why is the auditor maintaining audit documentation in the first place? Why? Why is the auditor what is the purpose? Why is the auditor maintaining audit document in the first place? Because it assists the team to plan and perform the audit. If you have audit documentation, guys, audit documentation that you're maintaining, the first 3 points, remember, are from the audit program perspective. Okay, the first 3 points are from the audit program perspective. Okay, means what? Audit program, which is a type of audit documentation. Okay, let me just show you how the audit program is. Look here. In our main notes, look here. This is the audit program. Can you see? This is the audit program for salaries and wages. This is the client's name. Okay, this is the financial year. Okay, this is prepared by, reviewed by. We have to write the objective out here, and we have to write down the list of audit procedures and the work paper reference. That is the audit documentation reference, and who has reviewed this work, that particular person will sign. Okay. See, these are the assertions that you have to get get evidence for: completeness, existence, accuracy. Okay, you want to gather evidence for these assertions. Okay, so this is how the audit program looks like. Now, understand the answer in context of this image. Okay, look here. What the purpose of audit documentation is that it assists the engagement team to plan and perform the audit. It assists the team to direct, supervise, and review the audit. If you notice the audit program that I just showed you, okay, the audit program was so easily you can direct, supervise, and review the work of your team. You can hold the team accountable for its work. The person, Joseph, who was supposed to do that work, if he does not complete it on time, the reviewer can catch hold of him that why did you not do this work? Understood? Enabling the conduct of quality control review and inspections. Okay, guys, tomorrow when we do SQC1, in that I will show you what is the meaning of engagement quality control reviewer. Okay, this is usually in the case of listed entities, and he is another partner of the firm who will check the quality of your work. So when he is coming to check the quality of your work, his butt of is going to check your documentation. He is not going to check your face. Okay. Enabling the conduct of external inspection. We already discussed NFRA, ICI. When they are doing inspections, they will only check your documentation. And last, retaining a record of matters of continuing significance for future audits. Guys, this is something which you also know. Whenever you maintain now these notes, these charts that are there, the charts that tomorrow the charts that you will print out, this entire link that I've given to you on the Telegram group. Okay, on this Aakash Pednekar channel, the Telegram the group link that I've given you guys. What will happen when you download that, when you take the print? Why you keeping? For future reference. Very simple. Many times, you know, there are siblings which are just 1 year younger. The parents will keep the elder siblings books for the younger sibling. Barabar na? Why are you maintaining that? For future reference. As simple as that. So the purpose of maintaining audit documentation is that when in the future, next year, when I do the audit of the same client, I can read the documentation and understand what all happened last year. Got it? One more example can be, we saw today SA 550, and in SA 550, in order to identify the related parties, we'll check our last year's documentation, because that also will contain details about related parties, and we'll try and compare with the current year if there are changes in it. चलो, got it. Next question. Factors affecting the form, content, and extent of audit documentation. Okay, first point is size and complexity of the entity. If the size is more or the client is more complex, it's quite obvious you need more audit documentation. Okay, if the client size is if the client is of a huge size or the client is very complex, then you need more documentation. Nature of audit procedure. Let's suppose you are doing inspection as a procedure, you will of course need more audit documentation. Identified risk of material misstatement. If there is high risk of material misstatement, you need more documentation. Okay बच्चों. Significance of audit evidence obtained. If at all you have original audit evidence, then less documentation will do. Nature and extent of exceptions. If there are high exceptions, then you need more documentation. The need to document basis or not, they need to document a conclusion. For example, estimates. For estimates, you have to do more checking. Therefore, more audit documentation. Audit methodology and tools used. If your client is a big four, sorry, not your client. If you are a big four, then in that case, you will have to maintain more audit documentation. Got it, guys? So these are all the factors that are affecting the form, content, extent. I hope the logic is clear to you. Very simple. Tomorrow, please ensure that you print this out and make these notes as well. Okay. But before we go ahead, people who are online, these are the two very important questions from this standard. Please write in the chat box purpose and factors done if you understood these two, so that we can go ahead. Write in the chat box purpose and factors done if you understood them. Chalo, very good. Now, before we go to documenting significant matters and judgments, come out here. Okay. First point is ownership. Okay. We are seeing the ownership of audit documentation. Very simple. As per SQC1, audit documentation is the property of the auditor. He may at his discretion provide extracts. Okay. If at all anybody is asking for your documentation, remember it is up to you. If you want, you can share some extracts. If the client is asking for documentation, you are not under any obligation to share. If at all you want, इसको क्या हो गया? हाँ बच्चों. Remember, as per SQC1, audit document is the property of the auditor. He may at his discretion make portions or extracts from audit documentation available to clients. It is your discretion. If you want, you can share, provided such disclosure does not undermine the validity of the work performed, the independence of the auditor, or of his personnel. Means you have to ensure that you don't spill out the beans. You have to ensure that the independence of your audit is still maintained while you share that data. Okay, चलो आगे बढ़ते हैं. Next important concept from the exam standpoint, assembly of final audit file. Okay, very important. I would say the most important topic in the entire standard. ठीक है, most important. Okay बच्चों, what is the point? Assembly of final audit file. Okay, now What do you mean by assembly of final audit file? It simply means that keep collating all the files, collating all the documentation into one file, collating all the documentation in one file. That is the meaning of assembly of final audit file. Ideally, you should do that within 60 days from the date of the audit report. Okay. Audit file is defined as one folder, or more folders, or on other storage media. Means it can be electronic also, means I can make folder on my laptop also. Okay. It is in physical form or electronic form, containing records that comprise the audit documentation for a specific engagement. Means every client, for every financial year, I will have to ensure that there is a separate audit file maintained. Got it? For example, X Limited FY 21-22 separate file, X Limited FY 2023 separate file, X Limited review engagement separate file. So for every engagement, please prepare separate files. Next, I already told you within how many days you have to prepare it. Not more than 60 days after the date of the auditor's report. In short, once your audit report is ready, within 60 days the file should be ready. Okay. Point number 2, remember, preparing the file, it is not an intellectual process. Preparing the file is an administrative process. I am repeating once again, preparing the file, it is not an intellectual process. Preparing the file is a administrative process. Acha, by the way, people who are online right now, don't forget, tomorrow morning at 8 a.m. Tomorrow morning 8 a.m. we are meeting for a one shot revision which is going on. Okay, in the one shot revision, guys, we have already covered up chapter 1, nature, objective, scope. We have covered up with the ethics and terms of audit engagement. We have covered up with audit documentation this chapter, and we have also covered up with the audit report. Tomorrow I am going to be covering bank audit chapter. Which chapter? Bank audit. Okay, tomorrow entire bank audit chapter will get covered. Got it? One second, I just remembered. Yeah. हाँ बच्चों. Okay, so remember, tomorrow morning we are meeting at 8 a.m. for bank audit revision. Okay, chalo. Let's go ahead. Assembly of final audit file is an administrative process that does not involve the performance of new audit procedures. I didn't even read once bank audit. So should I watch that? Yes, Pankaj, 100%. 100%. Rinki beta, it will be resumed from 26th. Okay, because beta, tomorrow morning at 8 a.m. to 11 a.m. I have the one shot revision beta for bank audit. Got it? After that beta, from 12:30 p.m. to 2:30 p.m. We have the group 2 regular batch going on the app. Group 2 regular batch is there on the app. Okay beta. After that, from 4 p.m. to 8 p.m. okay, we have the marathon part 3. Marathon part 3. And after that beta, at 8:30 p.m. I have kept the chapter 1 audit test. Okay beta. So that's why the tomorrow is completely packed. Got it? Tomorrow's day also is completely packed beta. That is the reason why tomorrow is difficult. But yes, from 26th we will restart. Okay. Chalo bachcho. Let us go ahead. Now, assembly of final audit file is an administrative process that does not involve performance of new audit procedures or drawing any new conclusions. So remember very carefully, when you are preparing this file, it is simply it is simply an admin work. It is not at all intellectual work. Okay. But there are some changes that the standard allows you. You can do some changes. And mind you, this is the exam question which was asked. What changes are allowed? You can delete old documentation. Superseded is old. Okay. Whenever we create PPTs, we create PPT version 1, version 2, version 3, and that is a final version. So the earlier 3 versions, they are superseded documents. Okay. So delete all those old documents. You can sort out the working papers. You can collate the working papers. You can cross reference the working papers. That's allowed, because this is not an intellectual work. You can document audit evidence that auditor had obtained, discussed and agreed with the relevant members of the team before the report. Means something was already discussed with my team that I'm going to be adding this in the audit file. You can definitely add that. And last, you can sign off on the completion checklist for final assembly process. So whatever a checklist that you have prepared, you can keep tick marking that. Okay, remember, there are the 4 changes that you can do. Only 4 changes allowed. Okay, deleting old documents. You can add the documents which are already discussed with your team. You can sort working papers, collate working papers, cross-reference working papers. You can sign off on completion checklist. Only these 4. Okay. And last point, for how many years I should maintain documentation? Not shorter than, means minimum 7 years. Not more than minimum 7 years you have to maintain the audit file from the date of the auditor's report, or if later the group audit, if there's a CFS audit, consolidated financial statements audit going on, take it, then CFS audit report say 7 years. Okay, minimum 7 years you have to maintain the audit file. For example, if the SFS audit report is dated 30th June 24 and CFS audit report is dated 30th of July 24, then 7 years will start from here, not from SFS audit report. Okay, chalo, very good. I hope the audit file concept is clear to everybody who is online. Okay, if you understood the audit file completely, write in the chat box audit file done. Okay, let's go to the last point now. Completion memorandum. Completion memorandum is nothing but, guys, it is audit documentation summary. What is completion memorandum? It simply means audit documentation summary. Okay, it is required, of course, in case of large clients. In case of large clients, you should prepare a summary. Okay, and in that summary, what you will do? Remember, in that summary, what you should do, guys? In that summary, you should include significant matters identified during the audit and how they were addressed. Okay, in that summary, you should include significant matters identified during audit, how they were addressed. This summary will help the reviewers and inspectors. Okay, you remember EQCR, engagement quality control reviewer, or NFRA, when they come for inspection, instead of looking at all documents, all the documentation, they will look at the summary. So their review, their inspection will be very effective and efficient. It is important in case of large and complex audits. Preparation of summary may assist auditor to consider the significant matters. Helps auditor to consider whether any relevant standard objective that the auditor cannot achieve, that will prevent him from achieving overall objectives. So the last point, guys, remember, when you are preparing the audit summary, audit documentation summary, that time when you take a bird's eye view, okay, of all the documentation that you have maintained, you may come across a situation where a particular standard objective was not met. I am repeating once again, a particular standard objective was not met by the auditor, and that would have at the end led to the auditor not being able to achieve the overall objectives. Got it? So therefore, preparing the summary is very good, because it helps you to identify your flaws in audit. If there was some issue, you can rectify that. Got it? So very simple completion memorandum. And let's go to the last point, guys. Documentation of significant matters. Okay, or as an auditor, you should always ensure that you are documenting the significant matters. Okay, what are significant matters? Results of audit procedures that indicate financial statements could be materially misstated. If you come across a scenario where you believe that because of this matter financials are misstated, it's a significant matter, please document that. Need to revise the auditor's previous assessment of risk. You remember very well when we were doing SA 505 external confirmation. Today we started off with 505, right, at 4 p.m. and we saw one last point. If the management does not allow you to send the external confirmation request, in that case you may have to revise your previous assessment of risk, correct? So that's a significant matter, please write it down. Okay, and auditor's response to those risks. Circumstances that cause the auditor significant difficulty in applying the procedures. If at all the client is not cooperating with you, the client is not giving adequate details, it's a significant matter, please write it down. And findings that could result in modification to the opinion. Okay, whenever you feel that whenever the auditor reaches the conclusion that he has to modify the opinion, either qualified, adverse or disclaimer, then that finding should be documented. In fact, whenever you believe you should enter an emphasis or meta paragraph also. Okay, I'll just give you a quick recap of EOM. Emphasis or meta paragraph, auditor will add the EOM paragraph when try recollecting. Yesterday I taught you Minda Furukua, right? Minda Furukua audit report. If at all a matter is appropriately disclosed in the financials and it is fundamental to user understanding, that is where the auditor will add a EOM paragraph. So it is a significant matter, you should document that. Got it? Similarly, the auditor should also document his professional judgments. Okay, when the auditor reaches the rationale for auditor conclusion, when requirement provides that he should consider certain factors. When the auditor takes into consideration certain factors and reaches a conclusion. For example, if you remember pandas, yeah, inherent risk of pandas. Okay, the auditor took all these factors into consideration and then he applied the analytical procedure, correct? So therefore, when he took these factors into consideration, he applied the analytical procedures. Therefore, it's a professional judgment. You should document that. Basis for auditor's conclusion on reasonableness of area of subjective judgment, basically reasonableness significant accounting estimates. Okay, if the client has basically provided for some accounting estimates, if he has made some provisions, and it's a significant provisions, then your conclusion whether that provision is reasonable or not, that you should document because that's your professional judgment. And last, basis for auditor's conclusion about authenticity of a document. If you came to the conclusion that this particular document is fake or this particular document original, then it's your judgment, you should definitely document that. Done. Okay, with that we are through with all the points in the audit documentation. We saw the definition, bacho. We saw the definition that what is the definition of audit documentation? Record of procedures performed, evidence obtained, conclusion reached. We saw the objective also. You're maintaining the audit documentation so that it forms a basis for your audit report and it forms as evidence that your audit was planned and performed in accordance with the standards. Nature answer also very similar. Purpose, we saw there were 7 points in purpose. It will help you for the external confirmation. It will help you for the external inspections. It will help you to plan and perform the audit. Then we saw form, content, and extent of audit documentation is depend on multiple factors. If the risk is high, then if the risk of material is high, you should maintain more documentation. If the size of the client is huge, you should maintain more documentation and stuff like that. Then we saw all the examples. Examples, I think so I have not added here in this chart. But anyways, examples are very simple. What are the various examples, guys? Your audit program, issues memoranda, then document, then your agreements that the client has entered into. Okay, invoices. Okay, no, not the invoices. Your significant matters. All of that will be the examples of audit documentation. Then we discussed in detail about audit file. Right? You have to ensure that the audit file is prepared within 60 days from the data audit report, and the file has to be, the document has to be maintained. What is the retention period? Minimum 7 years. Okay, from the data audit report or group audit report. Then we saw significant matters and we saw significant judgments. ओके, आई विल एक्सप्लेन जजमेंट वंस अगेन, बता देता हूँ बेटा, ये देख लो, वेरी सिंपल बेटा. Whenever the auditor reaches a conclusion based on certain factors, for example, when we saw SA 520 analytical procedures, there was one question that the factors the auditor should consider before applying analytical procedures, and the HTR was inherent risk of pandas. Okay, so therefore when you take into consideration all these factors, then you can apply analytical procedures. Okay, so when you take into consideration these factors, you're applying a conclusion, you're taking a judgment that yes, I should apply this procedure. So that judgment you should definitely document for future reference. Got it? Next beta, if the client has, in the financials, the client has made a provision, let's suppose provision for impairment of asset. Okay, provision for impairment of asset. Got it? In that case, the provision for impairment which the client has prepared, okay, now in that case the auditor will have to apply his judgment and come to the conclusion if that provision is adequate or not. That is a judgment, you should document that. And last, your conclusion whether a document is original or fake, that's a judgment beta, you should definitely document that. Got it, Rinky? Thank you, Pankaj. Radhe Radhe beta. Yes, we will meet tomorrow morning at 8 a.m. Yes, beta. Okay, done, guys. Perfect. We are through with our target for today. Our target for today has been complete. I am extremely happy with our today's output. The session went on for, I think so, almost 7 hours. Almost 7 hours. It took us 7 hours to complete this entire part. So, therefore, tomorrow we are going to be covering these standards. Got it? We will try a level best how many standards can get covered. Tomorrow's session is going to be from 4 p.m. to 8 p.m. only. Okay, tomorrow is going to be a 4-hour session. Okay, if required, I may extend that session, but I'm not quite sure. Okay, I'll try my level best to cover all the standards in this. How many standards are there? Total 1, 2, 3, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24, 25, 26, 27, 28, 29, 30. Okay, so out of 30, 17 standards have been completed. Okay, balance standards are there. We will try our level best to complete them tomorrow itself. Got it, bacho? Done? Okay, on that note, thank you so much, guys, for joining. You have been a great audience. Okay, tomorrow, please ensure that you join tomorrow morning at 8 a.m. for bank audit revision. Okay, and back again tomorrow at 4 p.m. so that we can try and complete as much as possible of this entire list. Got it? Please share these videos, the yesterday's video, today's video, with all your friends. Okay, and also please share the Google Drive link which has all these charts so that people can print them out and revise audit. Got it? On the same note, remember that this chart book will be available on the Adda Towards an website. The main book is already uploaded. If you want, you can place the order and get the book with you. Okay, the book is a complete summary of the entire study material. Got it? Thank you so much, guys. I will see you tomorrow. Bye bye. Good night.